So, fringe benefits, which is taxable to all employees. List of 8 items are going to be discussed in detail. Among them, 3, 4, 5, 6, 7 were completed. I think the traveling and touring accommodation also completed. Only 2 items left over to complete in fringe benefits, right? Let's try to finish off. 8th one, sale, transfer of movable assets, and then the first one. With that, section 17 class 2 subclass 8 will be completely over. Now, what happens in case of transfer of movable assets? Use of movable asset is different. Transfer of movable asset is different. In use of movable asset, usage right is transferred, but still the ownership is with the employer only. In that case, for the original value, 10% will be considered as perquisite's value if the property or if the movable asset is owned by the employer. If the employer gets in higher, then the higher charges will be considered as the value. Clear? Then ownership itself is going to be transferable. Taxable value on transfer of movable assets. Ownership itself. Ownership itself. So here, 3 blocks are there. One is electronic items and computers. Another one is motor car. Assets not falling under the above 2 category. Electronic items and computers includes only laptop and computer accessories. Okay. Sometimes there's a dispute. So what happens in case of refrigerator, washing machine? So you purchase all those ones in the electronic shops only, right? So there was a dispute. So those things will be considered as electronics items, sir. So will I consider the first step for the calculation of perquisites or not? Then of course the judgment is not in favor of the assessee. Totally different. Totally different. So in judgment, electronic items and computer represents only the computers, laptop and related accessories, motherboard and all, not other than that. Is that clear? So in case of computers and electronic items, 50% depreciation will be deducted every year under WDU model or the completed years of usage. Completed years of usage. If the asset is used for 3 years, 3 years and 11 months, the part of the year will be removed out, so you have to depreciate for 3 whole year, and that will be the perquisite's value. For example, a computer is transferred at free of cost. So the value of the computer being 1 lakh. For 3 years, you have to make the depreciation. So depreciation for the year at the rate of 50% under WDU method. Under WDU method. So first year 50% is 50,000. Then balance is 50,000, which is the WDU by the end of first year. Again claim the depreciation for the second year at the same rate, 50% on this 50,000, 25,000. If we subtract the 25,000 from 50, then another 25,000 will be the WDV by the end of second year. Now create the depreciation for the third year. On this 50% is 12,500. After that, the balance being 12,500, which is nothing but WDV by the end of third year. WDV by the end of third year. Is that clear? What about the remaining usage periods? 11 months. Never bother about that. So for every completed years, you have to claim the depreciation at the rate of 50% under WDV method in case of electronic items and computers. If this computer is given by the employer to the employee at free of cost, the perquisite's value being 12,500 minus amount recovered. Not at free of cost. Employer demands to pay some amount. Probably employer demanded around 5,000 rupees amount recovered. So 12,500 is the value. From that, 5,000 is deducted as the amount recovered. So balance 7,500 will be the perquisite's value. Nothing is recovered, then entire 12,500 will be the perquisite's value. But recovery being 15,000, what happens then? You should not show the value in negatives or 0. Okay. So always remember, whenever I talk about the perquisite's calculation, after offering those perquisites to the employee, any amount recovered, no. Calculate the taxable value as the usual method. Finally, subtract the amount recovered from the employee. That's all. So this is the logic. This is the logic. less amount recovered if any. In case of electronic items, 50% rate will be applicable under WDV method. In case of motor car, 20% will be taken under WDV method. Leaving these two assets, any other assets like furniture, any other electronic gadgets like refrigerator, TV, washing machine of the employer, transferred to the employee's name. In that case, straight away you can claim the depreciation at the rate of 10% only under SLM method, not WDV method, only SLM method. 10% for each completed year by SLM method. So these are the three things you have to understand. Electronic items and computers, 50% WDV method. Motor car like 20% WDV method for every completed years of service usage. And in case of any other assets not falling under these two, will be depreciated at the rate of 10% per year under SLM method. So you just know every year if you are depreciating 10%, what happens after 10 years? Usually the value becomes zero, right? Any asset transferred by the employer to the employee after 10 years of usage, the value is always zero. It's not perquisite at all. So if you are transferring beforehand, then this provisions will be applicable. Is that clear? With a small provision, let's now try to solve this illustration. Air conditioners purchased 4 years back for rupees 2 lakhs have been given to Badri by Ved Software Limited for rupees 9,000. Compute the chargeable perquisites. Air conditioner falls under any other assets. Any other assets not being the electronic items and computers. Okay. So you may be getting confused. So the AC may be electronic items, though it may be electronic items. As per this definition here will not be falling under. Only laptop and computers falls in this case. So original value being 2 lakhs and how many years used? 4 completed years. Okay, depreciation for 4 years. 2 lakhs into 10% rate of depreciation for how many years? 4 years. Under SLM method. Under SLM method directly you can depreciate here. 80,000 rupees can be depreciated. From 2 lakhs, 80,000 is depreciated. So balance value being 1 lakh 20,000 is nothing but WD value. From the WDV, you can subtract the amount recovered from the employee being 90. So 120 minus 90, 30,000 will be your perquisites value. Perk value. Clear? It's very simple illustration. Let's move on to the next one. Mr. C is an accountant of D Limited, gets salary 25,000 per month. He has purchased motor car and washing machine from the company on 1st February 2025. So washing machine and motor car. In case of motor car can be depreciated at the rate of 20% under WD method. Washing machine, the any other assets, right, can be depreciated at the rate of 10% under SLM method. And he also provided with a laptop and particulars of cost. Laptop given will always be exempted in case of a laptop is transferred for usage. Here, he was also provided with a laptop, means he is allowed to use the laptop for the official or personal purpose, whatever it may be. Laptop is given for the official purpose, whatever it may be, will not be considered for the perquisites. Because in IT, right, all the employees are getting laptop from the company for the official purpose. Usually that will not be considered as perquisites at all. If the laptop is transferred for his own use later on, then of course that's coming under transfer of movable assets. Automatically the first provision will be applicable. The cost of particulars of cost and sale price of the two assets. Two assets are transferred. This asset is allowed to use it. This will not be perquisites. Right. Compute the taxable perquisites. Now, in case of motor car, from 2013, 1st February 2025, the usage may be more than 10 years. Okay. Years of usage. More than 10. More than 10 will not be considered for the taxability at all. Isn't it? So automatically what happens? Motor car will be totally tax free. And in case of washing machine, from 15/9/2020, 2021, 2022, 2023 and 2024 and 15/9/2025. But the transfer happens in which date? 1st February 2025. How many full years over? 1, 2, 3, 4. 4 years over. 4 years over. So you can claim the depreciation for the 4 years. For this part of the year, you no need to consider for the depreciation. And as this is being the any other assets, you can claim the depreciation rate of 10% under the SLM method. Okay. So the original value being 10,000, you never bother about the sale value. Sale value is nothing but amount recovered from the employee. Amount recovered from the employee. Original value being 10,000, today's value, not a botheration. We have to depreciate at the rate prescribed here. So 10,000 rupees into 10% under SLM method for how many years? 4 years. 4,000 will be the depreciation. Now today its value being 6,000. Amount recovered. It's not transferred free of cost. The small amount recovered from the employee. That amount can be subtracted here. Amount recovered. Then whatever the ultimate balance you will have, this is called perquisite's value. Clear? Now, any doubts here? Clear? We will move on to the first item here. Interest-free loan provided at concessional rate of interest. Loan at concessional rate of interest. Yes. Now, in case of interest-free loan or loan offered not at interest-free, a small interest rate is charged. Then any interest waived will be considered as taxable value. Clear? If the loan offered being, say, 20 lakhs by the employer to employee, from employer to employee. And what about the interest rates are nil. As the employee being the loyal employee, employer says, have the 20 lakhs and renovate your house. You don't need to pay any interest. You just repay this 20 lakhs. That's enough. Now what happens, as per the Income Tax Act, to the extent interest waived by the employer will be considered as income. Clear? Will be considered as income. Clear? Now, what could be the rate of interest applicable for the home loan? Home loan. In that case, you can go and refer SBI's lending rate, State Bank of India. State Bank of India, usually for the home loan, they charge 9% per annum. Is that okay? You have to go and refer the SBI lending rate. If the SBI lending rate is 9%, what is the lending rate charged by the employer? The lending rate charged by the employer's rate being 0. Then taxable perquisites being full 9%. For the loan 20 lakhs, for that 1 year remains unpaid, then 9% on this applicable amount of interest, in this case being 1,80,000 rupees. This is the perquisites value. Clear? Suppose employer demands, I will give the loan, but I cannot give free of cost. Give me 5% at least. If you go to the SBI bank, of course you have to pay 9% interest. So I'll offer you at 5%. Now with the reference rate of 9%, the actual amount required is only 5%. The difference between these two, 4% will be taxable here. For the 20 lakhs, 4%. How much is that? 80,000. This is taxable perquisites. If the employer recovers 10%, what happens? Negative 1%. In case of negative 1%, nothing will be taxable. Don't say that negative means it may be subtractable from the salary. No, it's not going to be. Negative should be ignored. Clear? Will it be applicable always, sir? Or is there any chance to escape? Yeah, of course, you do have chance to escape from considering this being the perquisites in two scenarios. One is, if the original loan value being less than or equivalent to 20,000, then this will not be applicable. The loan borrowed from the employer being only 20,000 rupees or 15,000 rupees. Rate of interest charge being 0. Okay, actually SBI lending rate being 10%. Will I want to calculate 10% on that lending amount? No, not required, because the original loan is only 20. If the loan amount is less than or equal to 20,000 rupees, this will not be applicable, exempted. Second one being for medical treatment, okay, some emergency, that too some medical treatment expenses related to a specified diseases, okay, specified diseases. For that, the lending being say 10 lakhs. What happens in this case are also considered as exempted, provided he should not get any reimbursement from either employer or from any insurance company. If he borrows for the emergency for the treatment of medical purpose, that too the treatment is related to the specified diseases mentioned under rule number 3A. We have already studied rule 2BB, right? Here we are going to refer rule 3BA. Rule 3A will deal in detail along with the section 80 series. Around 4 or 5 diseases are there, like oncology, cancer related, and AIDS related. So few items are listed there. So those treatment will fall under this rule number 3A. So for that, if you are borrowing, then of course completely exempted. But provided you should not get any reimbursement. You are borrowing 10 lakhs from the employer, stating that there's a huge medical expenses, sir. 10 lakhs. Stating the same insurance company, from there also you claim medical insurance, you just applied and you got the claim from the insurance company 10 lakhs. And stating the same from one of the employers, sir, I'm very poor, I cannot afford this much, kindly give me some loan. Then you are making profit out of the disease, right? Should not be. So if you are borrowing this loan, you should not get any other benefits. Then of course this loan will be exempted. Remember, if the loan value is less than or equal to 20,000 rupees is exempted. In this case, the loan is 20 lakhs. Some years later, he has repaid 19 lakhs 85,000. Repaid. Now still, balance to be repayable as on this financial year, 24-25, is 15,000. Now the question is, the interest rate charged by the employer being 0. Interest rate. Is there any perquisites? Of course, there is perquisites. 15,000 rupees into the SBI rate, 9% will be the perquisites. Is that okay? How much is that? Probably 1,350 will be the perquisites. Why, sir? I am talking about the original loan. The one-time borrowing you do in the very first time, no, that loan amount is less than or equal to 20,000 will be considered as exempted. If the loan is more than 25,000, probably 21,000, of course, perquisites will be calculated. The next day itself, you repaid 1,500 rupees. Still, the loan pending in this current is 19,500. Then the exemption will not be applicable. You have to pay the perquisites value. Is that okay? So, loan in aggregate does not exceed 20,000 rupees. In aggregate, small amount put together. If the original loan is higher than 20, later on after the payment, the balance becomes less than 20. Still, that will be meant for the perquisites calculation. Or, the loan is provided for the treatment of specified diseases under rule number 3A. And not reimbursed under any medical insurance scheme. You should not get it reimbursed from any other place. And that loan should be repayable to the employer. Only then it is loan, right? It should be repayable later on. In these cases, you can consider this being exempted. Clear? Now, the last point I am going to clarify here is, usually the loan will be repayable in installment. If the loan is repayable in installment, how can we calculate it? For example, 1st April 2024, we have the loan being 20 lakhs. On 30/4/2024, he has repaid 1 lakh. Thereafter, the loan becomes 19 lakhs. Then how can we calculate? Okay. So the way of calculating is, in this April month, what is the maximum amount pending? Maximum amount pending is 20 lakhs. Okay. And what is the loan repayable as on the last date? As on the last date. Between these two, on the last day of the each month will be taken. So 19 lakhs will be considered for the perquisites calculation. So you should not calculate 20 lakhs into 9%. No, not required. You have repaid 1 lakh by the end of the last month. After the repayment, the last month the loan remains only 19 lakhs. So you have to calculate perquisites value only for that last date balance, 9%. At what rate? The rate will be applicable. We are going to study about the previous year, 24-25, and assessment year 25-26. Right. Okay. Now, what about the previous year? 1st April 24 to 31st March 25 is the previous year. No. The first day of the previous year, what is that? 1st April 2024. On the date, what the rate specified for such loan by SBI will be the final amount to be taken. Is that okay? Which date's rate will be taken? You have to go and refer the SBI rate. The SBI's lending rate may be keeping on changing. 9% suddenly it may be decreased to 8.5 and it may rise to 9.25, like based on the repo rate announced by RBI. Is that okay? Reverse repo and repo rates. Now and then there will be rates change announced by the RBI. Based on that, the SBI rate will also be changing. Right. Then which date's rate will be taken? The first day of the previous year. By the time, what is the rate applicable for the SBI for such lending? Such lending means if the lending is for the home loan, the home loan lending rate will be taken. Car, I want to purchase a car, so I get some loan from my employer, then car loan will be taken. Personal loan means personal loan rate will be taken. The type of lend you are borrowing, you are doing from the employer, and for the same borrowing, what could be the rate applicable in SBI will be taken. Which date's rate? And the 1st April 2024, the first day of the previous year. Right. Interest-free loan and concessional loan. Concessional loan is nothing but amount recoverable from the employee. Maximum outstanding monthly balance. Aggregate loan balance as on the last day of each month. Okay. Aggregate loan balance as on the last day of the each month. Clear? Once again. Then you have to apply the interest rate of SBI. Which date? As on first day of the relevant previous year. From there, any interest, if any, paid by the employee on that loan is subtracted. Balance will be the perquisites value. Okay. Now, this was a question asked in the exams. Very rare. Currently, we don't expect the illustration from here. Though it is so, a simple single line illustration may be expected. We'll see one of the comprehensive illustrations here. Housing loan at the rate of 6% per annum has been granted by Ved Software Solutions Software Limited to his employee Badri. Ved Software to Badri. And the rate charged by employer being 6%. Amount outstanding on 1st April 24 being 6 lakhs. Mr. Badri pays 12,000 per month on 5th of each month. Every month, 5th he makes payment of 12,000 rupees. Okay, monthly payment. Compute the chargeable perquisites in the hands of Mr. Badri for the assessment year 24-25. Lending rate of SBI on 1/4/24 for housing loan may be taken as 10%. Lending rate. So 6 is the amount charged and 10% is the SBI lending rate, and the perquisites value being only 4%. So you have to calculate the amount of interest at the rate of 4% for the perquisites value. SBI charges so much, but employer charges only 6%. The difference between these two is the perquisites value. Every month, the last date, okay, the value will be taken. So the last date means first month, 34/24, 5, 6, 7, 8, 9, 10, 11, 12, January 25, 31st, February 25, March 25. The original loan being 6 lakhs on 1/4/24. Every year there is a repayment of how much? 12,000 rupees. So as you made a payment of 12,000 rupees in the very first year, especially on 5th of April, 30th April, the value being 5,88,000, 12,000 rupees decreased. 1 month later, another 12,000 may be paid. So month on month, 12,000 is paid. So gradually 12,000 is reduced. So 5,88,000, 5,76,000, 5,64,000, 5,52,000, 5,40,000, 5,28,000, 5,16,000, 5,04,000, 4,92,000, 4,80,000, 4,68,000, 4,56,000. Okay. Now, what is the total value? 62 lakhs. So otherwise you have to calculate interest rate at what rate? 4 percentage per month. 5,88,000 pending for 1 month. So 1 month interest rate will be calculated. What's the value? 1,000. You have to calculate for all this year. Simple shortcut is there. Year on year, 12,000 is reduced. No, calculate 12% means interest on the 12,000 rupees. You subtract that, you will get directly all the value. Or another shortcut is summation of this value. Come on, 62 lakhs 64,000. For that entire value, you can calculate the rate of 4% for 1 month. That's all. What's the value you are getting? 20,880 will be the perquisites value. Will be the perquisites value. Clear? Five lakhs 88,000 in the beginning. 4,56,000 is the last year value. Divided by 2 into 12 months. Come on, get the value. This is a shortcut. Okay, rather than summing up. Okay, you will get this. Anyhow, you can work out either calculate the interest for every month separately or total it up all and calculate 1 month's interest for the total. To get the total first year's value and last year's value, first month's value, last month's value, and take the average into 12. That way also you can work out. This is only mathematics. Hope now you'll be able to understand the fringe benefits. Any doubts here? Online students, come on, respond me. Make it faster. Yeah. Clear? Section 17, class 2. is all about perquisites. Here we have completed the other fringe benefits. Other fringe benefits over. Now let me try to solve these two put together at a stretch. 1 and 2. Rent-free accommodation or accommodation provided at concessional rate. Okay, rent-free accommodation or accommodation provided at concessional rate will be always taxable to all short of employees. Okay, all employees. In the very first scenario, rent house property is given at free, no charge is there. In the second case, house property is given but not at free, a small amount is recovered from them. That's called accommodation provided at concessional rate. So you have to understand the term household. Household is different from the family. Travel, tour, and accommodation, we studied that in fringe benefits, right? So any accompanying households, okay, during the travel time, payment is made by the employer for the traveling and other thing will be taxable perquisites. Household means spouse, parents, children, and their spouse. Not only that, servants and any other dependents living in that same home will also be falling under that. Dependent, they should be dependent. Spouse, parents, children, their spouse, usually not necessarily being dependent. Dependent means they live only due to the support of the assessee. Then it's called dependent. No, they have independent capacity to earn, they have separate home and other facilities, then they are not dependent. So spouse, parents, children, and their spouse. Children and their spouse. For the members of household, they will be considered as members of household only, whether they are dependent or not. Dependent or not. But in case of servants, if the servants are living along with them and mainly dependent on the assessee, then only they will be falling under household. You understand? Family is different, member of household is different. Clear? Now, rent-free accommodation or accommodation at a concessional rate. Concessional rent. Accommodation could be fixed accommodation as well as floating accommodation. Floating accommodation could be caravan, mobile phone, and ship. Okay, these things are called floating accommodation. So in Jammu and Kashmir, no, and even Kerala, there are ships available where you can stay overnight and you can enjoy a small trip in ship itself. Okay, if you don't like nearby location, you can just sail the ship away from that location, but we cannot shift the property here we stay. We have to stay here itself, right? So fixed as well as mobile, both the locations will be there. I prefer, rather than constructing a fixed house, I want to have a caravan. That's more than enough. Isn't it? I just estimated the cost of the fixed accommodation as well as caravan. This seems to be pretty cheaper. I am very comfortable with that. Like a beggar, we can go anywhere in a royal way of speaking. You just think over caravan. I just estimated what's the price for a caravan. It came around 15 lakhs only. To construct the house property, it comes around 50 lakhs. Why do I want to spend around 50 lakhs here? But the facility is not available such a thing in India currently. In US, no, lots of facilities are there. You can live in car itself, right? So here are there, we have this petrol stations for fueling purpose. There also they have the petrol stations. Not only that, nearby a small parking venue may be offered it for a small rent, and once you go and park your caravan there, in a matter of 1 hour, everything will be pakka cleaned and a parking charge you have to pay, and then you can start travel in your caravan to the next place. So when I started my center in Chennai, sometimes later, probably 10 years ago, I keep on saying around 2015 and 2015 and 16, I keep on telling, okay, so I have the hobby to loiter a long distance. Okay, just think over. Rather than listening my lecture ideally here sitting, come with me in my caravan where we can accommodate 30 students. There also, sir. Anyhow, just think over. So in caravan, we'll just go for a long trip. We'll have the classes in caravan itself, right? And if you are not able to come with me, then you can listen my lecture in your own home using the laptop and other thing, online, Google Meet. Okay. So once the class is over, we will park in a nice location. There may be roam around place, and you can go and sit anywhere. Think over. So very nice, sir, for hearing and all. But will it be materialized? That's not about the dreams of many people may come into reality sometimes later. In US, right? In petrol stations, there is a small provisions also given for the car parking and then caravan parking. Go and park. All the water requirement is filled, and not only refueling of the water, means petrol. The water is also refilled and cleaned, and the gas we need no for cooking and other things. Small kitchen is there. So jolly, interesting. Huh? So if you are given the accommodation in the floating accommodation, also be considered as rent-free accommodation. So if you are getting employed, you always demand, sir, I need fixed accommodation as well as floating accommodation both. Okay. 9:30 or no? Okay, fixed accommodation as well as floating accommodation. Is that clear? Where do you want to stay? So you can demand. Before demand, always cross verify you are qualified to demand. Okay, you understand? So very interesting. Caravan and mobile homes and ships. So you may get the accommodations. These floating format. Or house, flat, farmhouse, in hotel, motel, serviced apartment, guest house. Okay, so YouTube bloggers, influencers will stay in farmhouse. Immediately they will publish that in YouTube. Then automatically Kumapatti. Every, everybody will start visiting those areas and finding it seems to worthless. Okay, so house, flat, and farmhouse. So many varieties of staying accommodations also be provided. It may be house, flat, farmhouse, in hotel, motel, serviced apartment, and guest house and all. Right? Any accommodation maybe you can go and stay. If it is given at free, of course, it will be calculated for the perquisites. Right? In case of judges, High Court or Supreme Court, Union Minister, leader of opposition party, officials of parliament, okay, for them, of course, this will not be taxable, but they have to shift out of the default tax regime under section 115 BAC. 115 BAC will be always taxable. If you are shifting out of that, then of course these things are exempted in case of High Court judges, Supreme Court judges, Union Minister, leader of opposition party. Okay, all clear. Any other officials of parliament, now Kamal Hassan also will enjoy rent-free accommodation at free of cost, right? So no need to tax. If he has 115 BAC, I've seen that, no? He inducted as a MP, Rajya Sabha MP. For 6 years, he will be having the tenure. Okay, then. Now, apart from that, now we'll go for the main calculation part. These things are very often expected in your exams, right? Now, rent-free accommodation given to government employee or others, non-government employee. In case of rent-free accommodation given to the government employee, license fee will be considered. License fee will be considered. License fee will be considered as fee. I mean, rent-free accommodation. Okay. So, license fee. In case of government, if you are getting the employment in government, they will give the quarters, employment exchange, run by government. Employees may be offered a quarters. Any quarters offered, no, there itself a license fee available for that quarters value. It's not real rent, it may be already given by the government itself. The license fee may be 3,000 or 4,000, like this, it may be available. The 3,000 or 4,000, what is mentioned as a license fee will be the perquisites value. Clear? In case of a non-government employee, if the quarters is owned by employer, owned by employer. Owned by employer. If the population is the place where the rent-free accommodation is provided, in that city the population is more than 40 lakhs, then perquisite's value being 10% of salary. 10% of salary. If it is anywhere between 15 lakhs to 40 lakhs, perquisite's value being 7.5% of salary. If it is less than 15 lakhs, then perquisite's value is only 5%. Is that okay? This population is as per 2011 census. 2011 census. Okay, so we are in 2025. 14 years ago, there was a census. Okay, currently we don't have the census. Then how can we estimate the population in India? Very simple, growth rate and death rate. Okay, so birth rate and death rate. Anyhow, during the birth and death, it should be registered, right? So while registering, they know what could be the birth rate. So birth rate may be say 3%, death rate may be 1.8%. Naturally, 1.2% is the growth rate. So year on year, 1.2% cumulatively growing over the 14 years. Based on that, they will estimate what is the today's population we have. But it cannot be realistic. There may be something may be missed. So real practical census may be taken to confirm. Okay, but usually it will take long time. So usually once in every 10 years they will calculate. So already we have the census as in 2011. 2011. As per 2011 records, if the location probably if the rent-free accommodation given in Chennai, definitely the population is more than 40 lakhs. As the population in Chennai and some metro will be definitely more than 40 lakhs, then the perquisite's value for rent-free accommodation will be 10% of the salary. 10% of the salary. Is that clear? And no need to mug up what could be the place and where we have the populations being 25 or 50 and all calculations. No need to worry about that. Okay, simply keep in your mind. Some major cities, no, definitely it will have more than 40 lakhs. Otherwise, in question itself, the small hint may be given. The population, the city may be 25 lakhs or 30 lakhs, it may be given, so you can take that. 40 lakhs and above, 15 to 40 lakhs, less than 15 lakhs. Based on that, the perquisite's value will be determined. In case of non-government employee, if the rent-free accommodation, the accommodation provided, it's not owned by the employer. The employer, he himself gets it in rent. Okay, hired one, what happens? In case if it is being hired, whichever is lower will be the perquisite value. Perquisite value is equal to whichever is lower of two things. One is rent, actual rent paid for the property. Second being 10% of salary. 10% of salary. So, three blocks you are going to study. Rent-free accommodation. In case of government employee, license fee. In case of non-government employee, whether the property is owned by the employer or he himself getting it from outside by rental, by paying the rental. If it is owned one, then based on the population, the perquisite's value may be decided. It may be 10%, 7.5% or 5%, depending upon the population. 40 lakhs and above, and 15 lakhs to 40 lakhs, and less than 15 lakhs. But of course, if he means the employer provides after getting it rental, then what happens? The rental charges are 10% of salary, whichever is lower will be taken. Whichever is lower will be taken as perquisite's value. Now, sometimes the accommodation provided, may be furnished. You no need to go and purchase the furniture. Most of the government accommodations, provided along with the furnitures. Okay, central government employees. Because central government employees are always transferred from one location to the other location. Maybe he is living in Delhi, suddenly he was transferred to Kanyakumari. Wait, sir, I will transfer all my luggages, including my cot, bed. Then it's very expensive to transport. Then what happens, while staying in Delhi, you stay in the residential quarters of the employer, where you no need to worry about to purchase any furniture. So cot, TV, washing machine, everything will be provided. Pakka. Just go and stay. If you are transferred, then you just transfer with the small luggages from Delhi to uh, in Kanyakumari, where you can stay. That's how you can enjoy staying. All furnitures are provided here. In that case, how can you value? Will the employer provides only the residential accommodation or furnitures too? Furnitures too. If it is only residential accommodation without furniture, the calculation is over. If furniture is provided, what happens? Recollect from the fringe benefits. What's that? In case of allowing any movable assets to be used by the employee by the employer, on that original cost 10% will be considered, right? So that's all. You have to add 10%. Add 10% on original value of assets, movable assets. So up to the first layer, this is nothing but rent-free accommodation, unfurnished rent-free accommodation. By adding this one, you will get rent-free furnished accommodation. Rent-free furnished, rent-free unfurnished accommodation. Now what happens? Section 17 class 2 subclass 2 sir. This is totally free. This will not be totally free. A small amount is recovered. What happens if any benefits given and a small amount recovered? Calculate the benefits value as per the provisions. Any amount recovered will be subtracted. That will be the second one. Amount recovered. So from here you just subtract amount recovered if any. Then this will be called what? Accommodation provided at concession rate. So three aspects are covered simultaneously. Three aspects. What are they? Rent-free accommodation. In case of rent-free accommodation, 10%, 7.5%, or 5% of salary, or license fee in case of central government employee, or high court judges, supreme court judges, and parliament members, nil. Okay, these benefits will be available only for shifting out of the default tax regime. Is that okay? Clear? And this is what about the first component. Second one is all about accommodation provided at concessional rate. In this case, how it is going to be calculated? From that, amount recovered is subtracted. Amount recovered is subtracted. This is what about the second aspect. As per the first aspect, this will be the value. If it is not free, concessional rate is charged, then this will be the value. This will be the value. Clear? Now, what happens in case of provisions of furniture, sir? Furniture, sir. Then original value into 10% will be calculated. If the furniture being owned by the employer or hired means higher charges will be taken. Higher charges will be taken minus amount recovered. Amount recovered. So we studied this under fringe benefits. You can club with this one. So what happened here? Rent-free and furnished accommodation. Rent-free furnished accommodation. Right. Accommodation at the concessional rate without furniture, with furniture. So these are the variations may be expected. So with that, point number 1 and 2, base concept is over. Few points are going to be covered, so that with that the entire content will be over. Okay. Any doubts here? So the most important point here is, what is salary, sir? Salary in this case being all. So up to now we have used almost 3 varieties or 4 varieties, 3 varieties of salary. For EA calculation, only basic is taken. For gratuity, where the gratuity is paid as per the Payment of Gratuity Act, then salary is equal to basic plus DA, forming part, non-forming part will be taken. Leaving that, in most of the cases, 3 will be taken. 3 means basic, DA forming part, and fixed percentage of commission. 3 will be taken. So 4 aspects we have covered. Fifth point is this one. So in the case of rent-free accommodation, salary includes all monetary benefits, taxable monetary benefits, leaving the perquisites and retirement benefits. All will be taken. All will be taken. Is that okay? See here. Salary for the purpose of rent-free accommodation include all monetary benefits. What are they? Bonus in accrual basis. Bonus in accrual basis also, you know that bonus will be taxable only in the payment basis, based on the payment basis. But in this case, even accrual basis also be considered. DA forming part only will be taken. Okay. Salary from two or more employers will also be taken. Okay. But retirement benefits or advance salary and arrear salary will not be considered. Will not be considered. All monetary benefits. Number one being all monetary benefits. Money form. Okay. Children education allowance. What about this, sir? You are getting the cash. Then tiffin allowance. You are getting the cash. Education allowance. You are getting the cash. Instead of that, free use of car. That is not coming under cash bonus. Cash allowances in kind. In case of kind, it will not be considered. In case of kind, will not be considered. If it is cash, cross verify whether it is exempted or taxable. Exempted, don't consider. Taxable, of course, is a part of cash. In case of the benefit being in kind, means perquisites, not considered. Not considered. All cash benefits will be, to the extent of taxable, will be a part of salary. Bonus will be taken on accrual basis, and DA, only forming part of salary, will be taken. If the employee is working under two or three employers, all the three or four salaries put together will be considered here. All the three or four means the salaries will be taken here. But advance salary, arrear salary, retirement benefits will not be considered here. Is that clear? So we have seen the list here. Salary for different purpose. In case of entertainment allowance, section 16, class 2. 16, class 2. Is that okay? Basic only will be taken. In case of gratuity, payment of gratuity act covered. Basic, forming part of salary, not forming part of salary, 3 will be taken. In case of rent-free accommodation, that is going to be discussed now. Basic, DA forming part of salary, fixed percentage commission, as well as taxable cash benefits will be taken. If he is being the employee of two or three different employer, you have to add all the employers' value here. Mr. X may be the employee of A company, B company. Both the salary will be taken. Is that okay? So for all this, all this value will be added for the calculation of rent-free accommodations. What is not taken? DA, non-forming part of salary, is not taken. Then perquisites, PF by employer, not taken. Perquisites not in the form of cash. Lump sum payment on retirement. At the time of retirement, you get lump sum payment like gratuity and all. Usually will not be considered. Like gratuity, leave encashment, VRS compensation, commuted pension, similar item. If you are getting a lump sum amount at the time of retirement, will not be forming part of salary. Clear? So I have completed this one, this one, this one. Rest of the most of the cases, other cases, leaving the retrenchment compensation, only 3 will be taken. This will be applicable in most of the cases. 3. Basic, DA forming part, and fixed percentage of commission. Is that okay? So only one thing to be discussed, which is specified employee. We will discuss that next, immediately after this. Okay, so we now complete RFA. We'll complete the RFA. Now you will be able to understand salary for the different purposes. Clear? Come on, make a note of it. If you have any doubt, you can ask me, else we'll solve one illustration in this topic. Clear? Text me, online students, come on. Now, Mr. Avilash is settled government employee. He is provided with accommodation. The license fee determined by the government is 3,000. In case of government employee, we have to take the license fee. Determine the government employee, government is 3,000 per month. An amount of rupees 2,000 deducted from his salary towards such rent. Then automatically it is all about section 17 class 2, subclass 2. Concessional rate. Accommodation provided at the concessional rate, not free. Determine the taxable value of the perquisites for accommodation at concessional rate. Cost of furniture providing costing 1 lakh and higher charges being 2,000 per month for 8 months only. Right. Now, accommodation at concessional rent. Concessional rent 3,000 minus amount recovered 2,000. License fee minus amount recovered. For 12 months, the value be 12,000 rupees. Furniture provided. Right. Employer owned 1 lakh. If it is employer owned, then 10% on the original cost will be the perquisites value. Okay, this value being 10,000, and hired one. For the higher charges 2,000 will be considered, but it is provided only for 8 months, 16,000. So this is unfurnished accommodation. By including the furniture's perquisites value 26,000, it becomes furnished accommodation. 38,000 will be the perquisites value in this case. Furnished accommodation. Perquisites value is the furnished accommodation here. Clear? Make a note of it. Now, let's move on to the next one. So you can join with me to solve this illustration. You can also work out parallelly. Okay. You no need to copy. As you know the provisions, you work out along with me. Online students, come on, text me. Satya, Sivaram, Astimini, Pandya, Kamakshi, Valiamai, Eunice, Gayatri. Keep texting me. Come on, make it faster. Now, or submits the following information regarding his salary income for the year 24-25, basic this much. DA forming part of salary 60% of the basic salary. CCA, children education allowance, transport allowance. He is provided with the rent-free unfurnished accommodation. Okay, this is class 1, subclass 1, 17 class 2, subclass 1, which is owned by the employer. The fair rental value of the house is not required. Confused one, it is given. In case of government employee, license fee will be taken. In case of non-government, we never bother about the actual fee. Okay, we'll bother about the salary only. Okay, compute the value of the perquisites for the accommodation provided, assuming that the accommodation is provided in a city where population exceeding 40 lakhs, population being 40 lakhs and more, exceeding 15 lakhs, but they not exceeding 40 lakhs. So 15 lakhs to 40 lakhs. The last scenario is less than 15 lakhs. Less than 15 lakhs. In this case, this is population. In this case, perquisites value being 10% of salary. Okay, 7.5% of salary, 5% of salary. Salary for this purpose being salary for rent-free accommodation. All monetary benefit will be taken. So first basic 1,70,000 per annum. In case of DA, we have to take only farming part of salary. Here this DA being farming part of salary only, that too which is 60% of the basic. So 60% of basic on this being, come on, 1,02,000. CCA, City Compensatory Allowance, 300 per month for 12 months, 3,600. Children education allowance, rupees 400 per month per child for 3 children. Children education allowance. Children education allowance. 400 per child for 3 children, 12 months, 14,400, but exemption is there. How much is the exemption? 100 per child, maximum 2 children into 12, 2,400. So 12,000 will be taxable children education allowance. Only taxable cash allowances will be considered for the salary in this case. Transport allowance, fully taxable. Transport allowance 115 BAC apt out. Okay, 1,000 per month, then per annum it is 12,000 rupees. Come on, get the total of all this value. 2,99,600. So 2,99,600 on the 10% being 29,960. If we calculate only 7.5%, this value being 22,470. Last case 14,980. 14,980. So rent-free accommodation, we referred these points. As per these two clauses, rent-free accommodation, accommodation at concessional rate, concessional rent will be considered for the perquisites valuation. Accommodation could be fixed as well as floating nature. Completely exempted in case of judges of High Court and Supreme Court, Union Minister, leader of opposition party, officials of Parliament. This will be available only if shifting out of the default tax regime is acted. Okay. In case of government employee, license fee will be considered. In case of non-government employee, based on the population, the location where the quarters is offered, no, cross verify with the population. If the population in the location is more than 40 lakhs, 10% of salary will be taken. If it is anywhere between 15 to 40, 7.5%, less than 15, then 5% will be taken, provided the accommodation is owned by employer. If the accommodation is leased out or rental, he himself getting it from rent, getting by rent, then whichever is lower will be considered as accommodation's value. Either rent actually paid or 10% of salary rent. Between these two, whichever is lower will be taken. Right. Few extra points I am going to discuss here. In case accommodation provided by government to an employee serving on deputation. Okay, government employee on serving on deputation. Then this is similar to non-government employee. Non-government employee. Okay, deputation. So government employees sometimes temporarily posted to other location. Okay, so a government employee working in Tamil Nadu Electricity Board, a senior accounts officer or somebody working in Trichy. Suddenly there is an emergency requirement to place the same posting officer some other location, probably in Rameshwaram. So he is taking role in Trichy. Sometimes he has to visit and work there for at least 2 or 3 more months to refill the employment. So until that period, he resides here as well as there, both the places. So in Trichy, leave it. That will be considered as a normal one. For the deputation period, he lives in another location, and there also a residence house property is given. No, in that case, the additional one for that taxable perquisites is calculated just similar to this one. Clear? But very rare. I have not seen illustration on this, but you have to understand the provisions I have added. Accommodation provided by government to an employee serving on deputation. The calculation is similar to non-government employee, but applicable only as accommodation is owned by employee. This will not be applicable. Only this one will be applicable. Okay. Though the government hires and gives, then also this provision only will be applicable. This provision only will be applicable. Hope now you will be able to understand the concept called deputation. Now, note, point number 1 is already completed. If the accommodation provided along with the furniture, 10% of cost of furniture, original cost of furniture will be considered for the perquisites value. If the furniture is provided by rental manner, taken by rental by the employer, then higher charges will be considered as perquisites value. Rent-free accommodation after termination. So employee got terminated 1/4/24, 31st March 25 in the financial year, 1/7/25/24 got terminated. But he vacates the office on 1/2/25. What about the rent-free accommodation benefit for this period, sir? For this period, it may be salary. For this period, he retains the same residential accommodation for few more period to vacate. But he loses the employer-employee relationship. Which date? This date itself. He loses the employer-employee relationship on 1/7/24 itself. There is no any employer-employee relationship anymore. If he is getting any benefit from the third party other than this will not coming under salary. May not be in other head. So naturally it will go to the income from other sources. So during this period, it will fall under income from other sources. Clear? Second. Third point. What is the third point? Just to reverse. 1/4/24, 31st March 25. He got employment on 1/7/2024. Employed here only. Okay. Here he was not employed. Immediately on 1/7/24 itself, residential accommodation is given. But anyhow, he has not shifted to the residential accommodation. He gets shifted himself on 1125 only. But he is eligible for rent-free accommodation from this date. From when? From when? From the date of appointment itself, he is able to enjoy the benefit. But anyhow, he says that, sir, I will take some more time to get my family shifted. Until the time I come daily, day basis. Okay. So he gets everything account means settled, and sometimes later he possesses the property completely. When he starts possessing it completely, 1125. So only for this period, rent-free accommodation perquisites value is calculated. For this period, no need to complete. Means calculate for the perquisites value. So taxable only if availed by the employee, not just provided by the employer. This is the date employer provides a residential house property, but he has not used it. He starts using only from this date. Then the rent-free accommodation will be calculated only for this period. For this period, it will not be considered. After the retirement also, if he possesses, then it will it will be falling under income from other sources. Even after joining, he delays the possession, then the rent-free accommodation will be calculated from the date of actual possession, not from the date of availing this means provision of this facility by the employer. Clear? So these are the 3 points you have to understand. So point number 2 and point number 1, 2, 3 all completed here. Clear? Let's move on to the next one. If accommodation provided at a project site, like some mining dams are constructed, maybe outskirts, far away from the city, remote area. If the location being almost 40 kilometers away from the city or town, okay, and the population is also very less than 20,000, then that rent-free accommodation is completely tax-free. Okay, remote area, then tax-free. Remote area means tax-free. But it is not remote, not beyond 40 kilometers, but beyond only 8 kilometers. If it is beyond only 8 kilometers, rent-free accommodation size should be less than or equal to 800 square feet. Then exempted. Beyond that, it will be taxable. So, in what are the scenarios completely exempted? If the rent-free accommodation provided at a remote area, then fully exempted, provided the remote area means it should be 40 kilometers away from a city where the population is only 20,000. Sir, it is not 40 kilometers away, sir. It's only 8 kilometers away, but within 40 kilometers radius. What can we do? Can provide, but the size is restricted only to 800 square feet. Clear? Fifth point. And one more point, 6. So we have 2 more points to cover in rent-free accommodation. Number 6. Number 6. In case of possession of 2 residential house property on transfer. 2 residential property. So he is in Chennai. Sometimes later, he is now transferred to probably Bangalore. Is that okay? In Chennai, he resides from 1/4/2020 to 31st July 24. Thereafter, he got shifted to Bangalore. 1/7/2024 onwards, he is in Bangalore. So he has been given residential house property, rent-free accommodation in Chennai, not in Bangalore, not applicable. Suddenly a call came and he was shifted from Chennai to Bangalore. Sir, where do I stay, sir? There. No need to worry about that. Go and stay in Bangalore. Okay, sir, I am willing to stay. When to go? Now itself. How can I go today itself, sir? I have to pack and transport all the luggages. No need to worry about that. You need to go there immediately. Leave all the luggages here itself and go settle there. You no need to hand over the key in Chennai. You now possess another house property in Bangalore also. So you have been given the residential house property, rent-free accommodation in Chennai also, in Bangalore also. For the emergency, he was transferred. He has not handed over the key in Chennai because his luggage is there. So he could not. So he transferred himself to Bangalore, and there also residential house property is provided. from 1/7/24 to 1/2/25. Thereafter, he calmly settled down, and 1/2/25 to 31st March 25, he has only this one because he has now surrendered. So he has surrendered the Chennai house property. Now he has only in Bangalore. What happened, sir? What happened, sir? Okay. During this period, rent-free accommodation will be calculated based on Chennai. Based on Chennai. During the period, rent-free accommodation is calculated based on Bangalore. There is no any doubt here. This is for how many months? 1/4/24 to 31/7. For 4 months, you have to calculate rent-free accommodation. If you are calculating the rate of 10%, the value what you arrive now, calculate for 4 months into 4/12. That will be taxable. When he resides in Chennai, in Bangalore, from here to here, how many months are there? 2 months. For 2 months, what he can do? He can again calculate based on the Bangalore and salary applicable by the time. 10% and you calculate for 2 months. Now this area, this particular part, we have 6 months. Am I right? 6 months. Up to 3 months. Up to 3 months. Calculate rent-free accommodation. Calculate rent-free accommodation in Chennai and rent-free accommodation in Bangalore as usual. Is that okay? Calculate rent-free accommodation at the rate of 10% and calculate for 3 months. Between these two, whichever is lower will be considered as rent-free accommodation. So up to 3 months on transfer, he may be allowed to possess 2 house properties, but for the perquisites calculation, calculate perquisites for the both house property, and based on those two values, least will be lower will be considered for the taxable value. Is that okay? Beyond 3 months, if any, beyond 3 months. Okay. Now what happens here in case of beyond 3 months? Rent-free accommodation in Chennai, rent-free accommodation in Bangalore. Take the summation of both the value for the perquisites value, both the house property. So during the transfer, he may be temporarily allowed to hold 2 house properties. Okay, happy then. Maximum 3 months are allowed. Maximum 3 months. Within that, he shifts himself and hands over the one property's key. No problem. He can calculate for only one house property's value for the taxable purpose. But if he retains for more than 3 months, calculate for the both house property and add up these two, and that will be the perquisites value. Only 3 months allowed. Only 3 months allowed. Is that clear? For the first 90 days on transfer, whichever is lower of 2 residential house property is taxable. Beyond 90 days, rent-free accommodation will be taxable on both the house properties. Both the house properties. Is that clear? Hope now you'll be able to understand this concept. Any doubts here? Shall I solve an illustration? So I'll solve the illustration so that you will be able to understand this point clearly. Mr. Ritesh is provided with an accommodation in Kolkata since April 2023. Salary is 40,000 rupees per month. Cost of furniture provided is 80,000 rupees. On 1st September 24, following a promotion with an increase in salary by 15,000, he was transferred to Jharkhand. Okay. So current year 1/4/2024 and ends on 31st March 2025. Up to 1st September, 31st August 24. He resides where? Kolkata. Thereafter, from 1st September onwards, he is transferred to Jharkhand. The population is anywhere between 15 to 40. Kolkata is a metro. Definitely, the population should be 40 lakhs and above. Thereafter, he resides in Jharkhand. The population is anywhere between 40 to 15 lakhs. And was also provided an accommodation there. Mr. Ritesh was allowed to retain the Kolkata accommodation till March 25. So, in Kolkata, he has been given the house property here, also here. In Jharkhand, not here, here it is provided. So this is related to the transfer, right? Related to transfer means you confirm whether it is within 3 months or more than 3 months. Within 3 months means you can take one of the two. More than 3 months means you have to sum up these two. 31/8/24 to 3 months means 9, 10, 11. So 30th 11/20/24. Is that okay? Now I can value this one. This will be taxable, not applicable. Between these two, whichever is lower of this one and this one. And in this period, thereafter, in this period, summation of this one and this one will be taken. Clear? Now find out. How many months here? 5 months. This will be 3 months. This will be 4 months. For Kolkata, what is the value? During the period, the salary being 40,000. In this period, the salary is 55,000. Kolkata means 10% will be taken. Jharkhand, as the population is anywhere between 15 to 40 lakhs, 7.5% will be taken. So Kolkata, no, 10% of salary, 4,000 will be taken. What about the Jharkhand, sir? Jharkhand, nil. Jharkhand being nil. Thereafter, here the salary is 15,000. In case of Kolkata, 15,000 into 10% being 5,500. In case of Jharkhand, 55,000 into 7.5% will be taken. In case of Kolkata, 10% will be taken. Jharkhand means 7.5% will be taken. So in case of Jharkhand, on the salary 55,000, you have to calculate 7.5%. That value being 4,125. Thereafter also 5,500 into 4,125. In the very first scenario, 4,000 is taxable. In the second subdivision, whichever is lower of these two, 4,125 will be taken. Beyond that, summation of these two will be taken, which is 9,625. And total being this 4,000 per month for 5 months, it is 20,000. 4,125 for 3 months, 12,375. 9,625 for 4 months, the value be 38,500. Overall total be 70,875. Is that clear? Now, as furniture is also provided, 10% percentage on this will be calculated here, which is 8,000 rupees. Ultimate value 78,875. Clear? Taxable furnished accommodation value. Clear? You understand? No doubt. Okay. The seventh point related to rent-free accommodation. If accommodation provided in hotel on transfer, so the employee is immediately transferred, okay, then temporarily he may be allowed to stay in a hotels, restaurants, right, along with the restaurant. Government or non-government, whatever it may be, this provision is applicable. Actual rental charges paid by the employer, 24% of the salary whichever is lower is taxable value, minus amount recovered, 24%. Usually 10% of salary, but here 24% salary during the stay period. Okay, in case of residential house property may be occupied for throughout the year, you calculate the salary for all the year, and on that 10%, 7.5% or 5% as the case may be, you can calculate. But in case of hotel, if he stays only 24 days or 15 days, so he stays from 1st October 2024 onwards up to 25/10/2024. You have to calculate the salary for this period first of all. Okay, salary for the periods is allowed to stay in hotel, and on that 24% will be taken. Clear? Clear? 25% salary or rent charged by the hotel, between these two, whichever is lower will be taken. Provided if the stay is less than or equal to 15 days, completely exempted. Completely exempted. So stay in hotel, cross check. If the stay is less than or equal to 15 days, then fully exempt. If the stay is more than 15 days, then fully taxable. How it is going to be taxable? 24% of salary or rent, whichever is lower is taxable, minus amount recovered. Some cases it may be totally different. If his stay is 25 days, 15 is subtracted, balance 10 days. Now for that only tax will be leviable. Okay, anyhow, you connect, you just go for calculating for 25 days itself. Okay, if somewhere if you find this one, no need to panic, you go with this one also. Similar one we have already referred in fringe benefit, right? In case of a free meal, if the value is less than 50, exempted. If the value is more than 50, completely taxable. Other approach where if it is 60 rupees, up to 50 not taxable, remaining 10 only taxable. That's how we can study. Similarly, in case of gift voucher, if the gift voucher rate is less than 5,000, fully exempted, more than 5,000, fully taxable. One case. In another case, if it is more than 5,000, beyond the 5,000 only taxable, the other way also. The same applicable here also. Up to 15 days stay is completely exempted. If it is beyond 15 days, how many days you know, for that only taxable is the other approach. But I recommend to go with the first model. What's that? If it is more than 50, fully taxable. More than 50, 50. In case of meals, fully taxable. More than 5,000 in case of gift voucher, fully taxable. Okay. I'll discuss that in detail along with the education allowances in the subsequent lecture. Education facilities in subsequent lectures. Right. Provided not more than 15 days and on transfer of employees, then fully exempted. Nothing is taxable. Is that clear? So we'll try to solve an illustration in this regard. Mr. Hyder was provided accommodation in a hotel by his employer for 22 days. As the number of days allotted to stay in hotel being 22 more than 15, this provision will be applicable. Before he could be provided with rent-free accommodation owned by the employer, the hotel charges paid being 6,000, the salary for the purpose of accommodation for the period of 22 days. The days of stay in hotel, and we need to calculate the salary for that 22 days, but in this question it's directly given. For the 22 days, the salary being 22,000. Then whichever is lower is taxable. Number one being 24% of salary. Okay, 22,000 salary for the period of stay into 24%. Come on, tell me what is the value? 5,280. Second one being the hotel charges, actual charges. Between these two, whichever is lower, 5,280 minus amount recovered. Compute the value of accommodation assuming 3,000 was recovered from employee. So 3,000 is recovered. So amount recovered. Balance being 2,280. This is taxable requisites. Taxable rent-free accommodation. Is that clear? We will break and resume by 11:30. Section 17, Class 2, Subclass 3. So we have completed subclass 1 and 2. Let's try to finish off 3 and 4 here. 3 and 4. Any benefit or amenity granted to specified employees. If the benefit and amenity granted to the specified employees, then it's taxable. If it is given to non-specified employee, it's exempted. Is that okay? So then you need to understand who is called a specified employee, who is not. Is that okay? For that purpose, we need to understand the calculation of specified employee here. So, if employee being a director of the company, a director employee, role may be administration, or who has substantial interest, direct employee or substantial interest, or his monetary benefits, salary exceeds 50,000. On satisfaction of one of the three conditions is more than enough to qualify he is being the specified employee. If all the three not satisfied, then he is called non-specified employee, nothing will be taxable. Direct employee, substantial interest, monetary benefit in excess of 50,000 rupees. Clear? Let's now, we'll move on to the next one. What is called substantial interest? Substantial interest. In case partnership firm, the partners holding is more than 20% of PSR. If PSR, profit sharing ratio, is more than 20%, then he has substantial interest. In case of company, voting power is more than or equal to 20%, then he has substantial interest. He has substantial interest. So if the employee being direct employee or who has substantial interest or monetary benefits in excess of 50,000 rupees, in all the cases he is considered as specific employee. This particularly this PSR as well as voting power should be held as beneficial owner. Clear? Beneficial owner. Hope now you will be able to understand. Firm's PSR is more than or equal to 20%. Company's voting power being more than or equal to 20%. And his ownership being the beneficial owner. So we have two ownership models here. One is beneficial owner, another one is registered owner. Shares may be in the name of A, but actually the benefit is enjoyed by B. Share is registered in A's name, but benefits are enjoyed by B. Is that okay? Beneficial owner. Now, for example, Hindu undivided family and XYZ partnership firm. Mr. A being the member of Hindu undivided family. Hindu undivided family offered him 10 lakhs. Mr. A investors 10 lakhs in XYZ company. Is that okay? Or it may be company. The holding may be more than or equal to 20%. The shares are in the name of Mr. A, who is being the registered owner. But actually the money is received from the Hindu undivided family, Huff fund. I cannot purchase a share in the name of Huff, so I purchase in my name, but the fund actually collected from my family. So subsequent period later on, any benefit transferred from the company to Mr. A, dividend or whatever it may be, ultimately it's belonging to Huff only. The benefits on this investment is ultimately transferable to Huff, you know. That's why Huff is called beneficial owner. Beneficial owner. Is that clear? To have the substantial owner classification, substantial interest classification, you should be the beneficial owner holding more than 20% shares, or your PSR in partnership firm is more than 20%. Then automatically you will be the beneficial owner. Clear? Here, A is not having substantial interest because he is only a registered owner. He is not being the beneficial owner. Note 1. Holding shares by A, Karta of Huff, which was funded by Huff and the dividend is also transferred to Huff. So, funded by Huff and invested in XYZ. The dividend distributed by XYZ is also transferable to Huff. In this case, A being the registered owner, Huff is the beneficial owner. Hence, A does not have substantial interest. A does not have substantial interest. And to qualify, he is being the specified employee, substantial interest should be held individually, holding individually. He himself should hold more than 20%. In the subsequent lecture in income from other sources, I will be again dealing with the substantial interest where collectively holding, family put together, Mr. A, his spouse, and all put together, if they hold more than 20%, then it will be considered as substantial interest. But in this case, to qualify that employee being the specified employee, in his name or beneficial ownership should be more than 20%, only then taken. Not holding collectively by the family. Okay. So, Mr. A alone, how much is holding? And the last one is monetary benefit in excess of 50,000 rupees. If all the three conditions are satisfied, even one of the three conditions satisfied, then he is called as specified employee. Clear? Now, why this study is very important? Why this study is very important? Amenities and benefits we're supposed to study under section 17 class 2, subclass 3 and 4. Is that okay? As per the third class, subclass, okay, all the benefits and amenities taxable only for the specified employee. To whom? Specified employee. What are the benefits and amenities? A list is given here. So we have to study all this list here one after one. Car facility, sweeper, gardener, watchman, gas, electricity and water supply, education facilities and concessional tickets for the transport purpose and medical facilities, LTC. All these things will fall under this. Is that okay? All these things are taxable only in the hands of specified employee. And as per the condition number class, subclass number 3, this will be taxable for all the employees. This will be taxable for all the employees. So you have to qualify, you have to calculate whether he is being the specified or not. Some cases it will be taxable only in the hands of specified employees. Some cases it is taxable under both the heads. Both the hands. Already we studied that, no? Okay, this one. 1 and 2 taxable for all employees. And 3 taxable only for the specified employee. 4 taxable for all employees. Taxable for all employees. Now, what about the monetary benefits? How can we calculate salary for this purpose? For the specified employee calculation, salary is inclusive of all items. Inclusive of all items, specified employee. What are the things are there? Basic, DA farming part, DA non-farming part, fixed percentage commission, all taxable cash benefits. Both are more or less same like. Both are more or less same like. These two are not same. And this is also not same. Only these differences you have to note between RFA as well as specified employee case. Under specified employee cases, all the 5 items will be totally taxable income. And other employer, if he draws the money from other employer, that will also be taken. And of course, you have to subtract what? Deductions. Okay, deduction to section 16 class 1, 2, 3, 1A, 2 and 3. Okay, standard deductions will be available. Okay. Now, let's try to solve an illustration to find out whether he is a specified employee or not. Yes. Mr. M is an employee of Z Limited. What is the question? Is Mr. M a specified employee or non-specified employee? His basic salary being 74,000. Basic salary. 74,000 into 12 months, how much? Hmm? Oh, okay, per annum. 74,000. DNS allowance being 12,000. Medical allowance being 10,000. Conveyance allowance being 6,000 per annum. Professional tax deducted from his salary 1,000. From his salary. This can be deductible under section 16 class 3. Free lunch provided during the office hours. Free lunch is perquisites, non-cash benefit, not required to be considered. Not required to be considered. Okay. Free education for 2 children. Free education, also perquisites, not considered. School tuition fee for both the children is estimated rupees 18,000 per annum. The value is 80,000 rupees, 18,000 rupees, but given at free in their own institution. So, you no need to pay any fees, but you can enjoy the benefits. Then it is called as perquisites or benefits in kind. We will be considering only taxable cash allowance. It's not in the form of cash, it's only in the form of kind. So, leave that. Only cash allowances are taken. Now, come on, total this. 1,02,000 rupees. As per section 16 class 1A, standard deduction could be 50,000 rupees. And 2 will not be applicable. Section 16 class 3 will be applicable, which is for professional tax. The professional tax paid in this case being 1,000 can be subtracted. 51,000. If I subtract this, then 51,000 is the final value. As this value is more than 50,000 rupees, he is called specified employee. He is called specified employee. So 3 conditions are verified. Is he a director employee? No. Will he possess substantial interest? No. What about the monetary benefit? More than 50,000. More than 50,000. Yes. Even satisfaction of one condition is more than enough to qualify he is being specified employee. Okay, status. 115 BAC is shifted out. Shifted out. Is that clear? What happens if he adds 115 BAC? This is a scenario where 115 BAC is not apted. If he shifts out of the default tax regimes 115 BAC, gross salary remains same. Right. And standard deduction being 75,000. You cannot claim any of the deductions under section 17 class 2 and 3. Only 1A standard deductions can be claimable, which is 75,000. If I subtract this, 27,000. Then automatically he is a non-specified employee. If I add 115 BAC, he is not direct employee. He is not having substantial interest. His monetary benefit is more than 50. No. All the 3 not satisfied, so he is a non-specified employee. If he is being non-specified employee, all the 7 items not going to be taxable in his hand. If he is being the specified employee, apart from all the taxable income, you have to add these income also be taxable income. Is that clear? Yes. Make a note of it. Clear? Text me. Make it faster. Yeah. Now we'll move on to the valuation of motor car. Valuation of motor car. If employer provides car to the employee, okay, car facilities, right? How about the taxability? Car facility is a perquisite in kind, so it's a perquisite. How about the taxability? What are the facilities may be or benefits may be given by employer to the employee with respect to the car? Car by default, and driver, chauffeur, otherwise chauffeur, driver, even fuel and oil, maintenance, okay, maintenance. These three facilities may be offered. Am I right? Offering car is similar to what? Offering mobile assets to the employee. Then automatically original value on that 10% can be taken. Right. So that's the logic for car. If driver and chauffeur provided, actual salary paid to the driver will be considered as a requisite value. Maintenance actual will be taken. All these things put together will be taxable. When? If it is used for personal purpose. Entire thing will be taxable. If it is used fully for official purpose, then what happens? Exempt. That's it. Clear? So whatever the car facilities, car, not only car, sometimes driver also be appointed and payment is made by the employer, and maintenance charges and fuel cost, running and maintenance. All these costs borne by the employer. Now the question is, who is going to bear all these things? For what purpose? It is for the official purpose, sir. Only for the official trip you are using that. Then everything will be exempted. If it is for personal purpose, fully taxable. That's all. Now the main case is all about, if it is partly used for the official, partly used for the personal purpose, what can we do? Clear? Partly official as well as personal. Okay, as well as personal. If he is using for official as well as personal purpose, how can we calculate? Clear? Now, car is owned by whom? Car owned by employer. Okay, car owned by employer. In this case, where he is using for both the purpose, then if the car CC being less than or equivalent to 1.6 liter, car CC, or more than 1.6 liter, high capacity, low capacity, okay, cubic capacity, Now again, whether the expenses is met by whom? Expenses by employer. Car is also by employer. Expenses also by employer. Three items are there. Car, expenses, running expenses, chauffeur, driver. Okay. Car is owned by the employer. Expenses also met by employer. Forget about the driver currently. If car expenses is met by employer, by expenses by employer or by employee, what happens? 1800 will be considered. 1800 will be considered as perquisite value. If it is more than 1.6, 2400 will be considered. What happens in case of chauffeur, sir? Chauffeur also provided, driver also provided. Then add another 900. Entire value will be the taxable. So car provided, maintenance provided, chauffeur provided. Then car and maintenance put together 1800 or 2400. If the cc of the car is less than or equal to 1.6 liter, 1800. If it is more than 1.6 liter, 2400 will be taken. And chauffeur is also provided. In case of chauffeur, you have to add another 900 rupees excess. 900 rupees excess. Now, the overall taxable value being either 1800 plus 900 or 2400 plus 900. Okay, clear? Clear? Suppose car only provided, expenses is paid by employee himself. The employer says car is available, you can take. Use your own fuel, and maintenance also you have to take care of that. So then, in this case, all the three items are provided. Two items. What are they? Car and maintenance, including chauffeur, three items provided. In the second case, car is owned by the employer, but expenses met by employee himself. So only one item. In that case, 600 and 900 will be the perquisite value. 600 and 900. Only one item. What is that? Car only for car. Driver is provided, then another 900 rupees will be addable. So it is 2. Clear? Is it car, expenses, driver all provided? Yes, sir. Then the value is higher. Car and driver only provided, then the expense, the value will be totally different. Is that okay? In this case, car plus expenses. This is driver. Here, car only and driver. Clear? This will be the perquisite value. Only when he uses the car for own as well as official purpose. If it is used for personal purpose fully, then fully taxable. Official purpose fully exempted. Is that okay? Now, what happens if car is owned by employee? Car is owned by employee. Clear? Car is owned by employee. In this case, expenses met by employer. Expenses by employer. Reimbursement of expenses. Actual value. Actual expenses. So employer says, if you have car, you can use your car. Monthly, I will give 5,000 rupees for petrol, maintenance, whatever it may be. Don't ask me car. If car is running short, if you want, you can use your car, then you can get the maintenance expenses from us. Okay, from there, you just subtract this value. Balance will be the taxable perquisites. Taxable. Clear? Taxable. So you have to memorize only one point. What's that? In case of the car is used for personal and official purpose, then automatically what happens? Whether the car is owned by the employer or employee. In case of car owned by employer, will he be paying for the expenses also? Yes, sir. Then the rate being 1800 or 2400. Will he be providing the chauffeur, yes sir. For the chauffeur, you can add another 900 rupees. Sir, he provides car, doesn't spend even single penny for the expenses. Then the value is 600, 900 rupees. Chauffeur, add 900 rupees for that. Car is owned by the employee, but the expense is met by whom? Employee. Then what you can do? You can simply the amount recovered minus this value. This value is subtracted. Balance will be taxable. Balance will be taxable. Is that clear? One more point. Car is owned by whom? Car is owned by whom? Employer or employee. If car is owned by employer, taxable only for specified employee. If the car is owned by employee, taxable for all employees. Taxable for all employees. Is that clear? Now, here I have given the chart. Valuation of motor car. If the car is used for official purpose, nothing is taxable. Private purpose, fully taxable. Fully taxable means whatever the benefit you will get from the employer. Employer gives only car and states that you have to spend for the material, means fuel and other things, and driver you need to arrange yourself. Then for the car value only will be being taxable. If he provides for maintenance also, that will also be taxable. If he provides a driver, that is also taxable in case private. Running maintenance actual, chauffeur actual, wear and tear actual, everything will be taxable. Is that clear? And in case if he is using for both the purpose, car is owned by whom? Car is owned or hired by employer. Then automatically the idea that you have to keep in your mind being two more things are left over. Car is already provided. Two more things. What are they? Running and maintenance and chauffeur. If running and maintenance is also given, 1800, 2400 will be taken. Expenses met by employer. Already car is owned by the employer and running and maintenance is also given by employer. If the car's capacity being less than or equivalent to 1.6 liter, 1600, okay, then 1800 will be taken. If the QP capacity is more than 1.6, 2400 will be taken. And if driver provided, another 900 will be addable, that will be the taxable value. Car is provided, expenses by employee himself means not provided by the employer. In that case, 600 and 900 will be taken, and chauffeur provided 900 will be taken. That will be the taxable value. In case car is owned by employee, car is owned by employer, taxable only for specified employee. If the car is owned by employee, taxable for all employees. All employees. Clear? Official purpose nil. Private purpose, of course, car is not owned by employer. It's owned by employee himself. So only two costs can be recoverable. One is for maintenance, another one is chauffeur, wear and tear. Car cost will not be there. So rest will be similar. So you don't need to worry about this part completely. You don't need to worry about this one also completely. These things are very simple. It's only filling the pages, very simple. If it is official, then completely exempted. If it is personal, fully taxable. But the problem comes only where? If it is used for official as well as personal purpose, then automatically problem comes. Then your question is who is spending, who is owner and who is spending. If the car is owned by employer, then it is taxable in the hands of all the employees. If the car is owned by the, in the case car is owned by the employer, taxable only for the specific employee. If the car is owned by employee, then it is taxable for all categories of employees. Now, if the car is owned by the employee, he gets a reimbursement for the petrol and the driver, whatever it may be. He just gets it from employer. From that amount, this number can be subtracted. Balance is taxable. In this case, this amount itself taxable. In this case, from the amount recovered, you subtract balance will be taxable. Clear? So very simple. In case of a private purpose, fully taxable. What offered? Car, running and maintenance, and chauffeur. If it is provided, yes, taxable. If it is provided, yes, taxable. It is provided, taxable because private. In case of usage of this one for official purpose, fully exempted. That's all. Clear? Now, car owned by employer, taxable for specified employee, and owned by employee, then taxable for all employees. The main place that you have to understand is both the purpose. Personal and official. In that case, two aspects are there. What are they? Car owned or hired by employer. Car by employee. And here again two classification. Expenses by employer. Expenses by employee. I have not talked about the chauffeur driver. Now cc of a car less than or equal to 1.6 liter, then 1600 will be 1800 will be taken. More than 1.6 liter, 2400. Okay, what happens if driver given, chauffeur given, another 900 rupees will be addable. But if the expense is met by the employee, only car is given, no, the value is reduced. How much? 600 and this will be 900. Car is also given, driver is also given. For if the driver given, then I add another 900 rupees. If the expenses, if car is owned by the employee and he reimburses any amount for the expenses. So amount received from the employer, actual amount. From there, you have to subtract what? This number. Balance will be taxable. You don't need to mug up this separately. This is nothing but the same number. Clear? I have given the big chart like, and here it's a handy like for easy understanding. Clear? Yes, come on. If it is clear, text me. We'll solve some illustration here. Clear? Few more points like amount collected from employee is not subtracted. Any amount recovered is not subtracted. Usually we'll subtract, but here it will not applicable. Reimbursement of running and maintenance cost of other automotive conveyances also considered as taxable. Rather than car, two-wheeler is provided. What happens? The same will be applicable. Whatever the amount you collect will be taxable if you are using for the private purpose. More than one motor car is provided. If 3 motor cars are provided by the employer for the employee's purpose, one of them will be considered as official, rest will be private only. Okay. So one car is treated as official partly and private purpose, both. Other cars will be considered as private purpose only. Okay. Then higher deductions can be claimed if logbook is maintained. Very rare for your examination. Earlier, no, they have the logbook. Now also in most of the companies, they will have the logbook where the car may be used commonly. Number of kilometers run for each and every employee for each and every purpose will be noted by the driver in a book. Okay, started with 1,25,000 kilometers, 1,25,300 kilometers driven for this purpose. Such a way he maintains all the details in pakka manner. And based on the number of kilometers driven for the official purpose is exempted, based on the number of kilometers used for the personal purpose will be taxable. But provided you need to use the pakka logbook usage, which is usually not available here. And in case if it is provided to High Court and Supreme Court judges, it is not taxable. Okay. So other things, no need to worry about that. A part of month shall not be considered for this purpose. These are the small additional points. Okay. So here I have been given other details also. Very rare, very rare. So you don't need to worry about this. Okay, this is all about two-wheeler and other things. In case of two-wheeler, what happens? Usually don't get the driver, remove it. Right, so don't expect the driver for the two-wheeler. That's all. Rest of the things are same. Normal wear and tear, 10%. To have a small idea, you can understand. Others not required. Not required. Yes, come on. We try to solve the illustration now related to the car. Mr. Rahim, director in an MNC, director being the specified employee, okay, is entitled to a motor car 1.8 liters capacity for both official and private purposes. Discuss the taxability of per cases if the car is owned by employer, expenses paid by employer, and it is chauffeur driven. Everything is from employer only. Expenses also, car also employer, expenses also employer, driver driven car, chauffeur is also there. Then automatically 2,400 will be considered plus 900 for driver per month into 12 months. Into 12 months. Clear? Which one is going to be taken? This part. As the car capacity is more than 1.6, for that 2,400, chauffeur driven for that another 900. So 3,300 will be taken. 3,300. Clear? So overall value be 39,600. If the car is owned by Mr. Rahim, this will be taxable only for whom? Specified employee. And he is also being the director, he is definitely specified employee taxable. In case the car is owned by Rahim, then it is taxable for whom? All employees. Car owned by means employee, then it is taxable in the both the employees. Expenses incurred 30,000 and chauffeur is paid 90,000 provided by the employer. So how much is the reimbursement from the employer? Employer to employee, as the car is owned by employee and he spends and recovers the money from the employer. Sir, so much cost we spent for running the car, so kindly give me the money. Okay. So for running cost, 30,000 running and repairs and all. For chauffeur, this employee recovered around 90,000 rupees from employer. 1,20,000 is the overall amount you collected. From there, you have to subtract what? This value should be subtracted. What is that? 2,400 for car and 900 for chauffeur per month for 12 months. Okay, deduction being 39,600. Balance taxable value being 80,400. Is that clear? Make note of it. Now, let's see. Perquisites taxable only in the hands of specified employees. Now, perquisites taxable only in the hands of specified employee, one of them being motor car and other automotive, maybe any other vehicles. Provided if the vehicle is owned by the employer, if the a vehicle is owned, the car is owned by the employee, then it is taxable under all the conditions. We have completed the first part. Now we'll be moving on to the second part. Provision of sweeper, gardener, watchman, and personal attendant. Right. Provided not on demand. What does it mean? Employer, employee. Employer provides sweeper, gardener, watchman, or personal attendant. Clear? And payment is also done. Appointed by the employer, payment is also done. Both. In this case, this will be taxable only in the case of specified employee. Under section 17 class 2 subclass 3. Clear? If sweeper, gardener, watchman, and personal attendant appointed by employee he himself informs to the employer and employer makes the payment. What does it mean? Now appointment of these workers as per the request of employee and on his demand the employer provides. Then this will be taxable for all employees under section 17 class 2 subclass 4. You have to understand these two provisions. Majority of the benefits employer voluntarily offers no, then it is taxable only in the hands of the specified employee. On the demand of employee, if it is provided by the employer, this is taxable for all the employees. Okay. 3 and 4. 3 and 4. 3 and 4. Any benefit or amenity granted to specific employee. Granted means what? Employer offers to employee. Any obligation of the employee paid by the employer. What does it mean? Employee demanded, then employer offered. On demand of employee, if it is offered, then it is taxable for all employee. And this will be taxable for specified employee. Then from this it is very clear, you have to cross verify whether it is offered by the employer or as per the demand it is offered. If it is as per the demand it is offered means it is taxable under section 17 class 2 subclass 4. Employer voluntarily offered, then it is coming under section 17 class 2 subclass 3, taxable only in hands of specified employee. Right. Domestic servants, sweeper, gardener, watchman, personal attendant, not taxable when? In case gardener provided with employer owned RFA, if rent-free accommodation is provided by employer along with the gardener, then it is not taxable. Along with the gardener. Okay, rent-free accommodation is provided and employer is always interested to keep the place neat and tidy with the plantations. So for that he may recruit the gardener. In that case it's completely not taxable. Otherwise, sweeper, gardener, watchman and personal attendant. Servant engaged by employee, salary paid by employer. What does it mean? Employee demanded and employer makes the payment. Then this will be taxable for whom? All employees. As per section 17 class 2 subclass 4. If the servant engaged by employer, voluntarily he himself gives to the employee, salary also paid by the employee. Then it will be taxable only for specific employee as per section 17 class 2 subclass 3. Clear? See here. Mr. E is engaged with N Limited. He also gets the service of sweeper and watchman. Determine his gross salary. Shift out of the default tax regime. Okay. Optional tax regime. His salary being 8,450. Salary being 8,450. First, we need to know whether he is a specified employee or not, because here the sweeper and watchman are provided by employer, means it is taxable only for the specified employee. So you have to consider, we have to first calculate whether he is a specified employee or not. Salary being 8,450 per month, and per annum, come on, 1 lakh 1,400, 1 lakh 1,400. Employer provides the service of sweeper and watchman. He pays them 600 and 500 per month. Who provides this? Employer. Then it is taxable only for specified employee. He has paid, that employee has paid employment tax, professional tax 1,400. Now find out the taxable salary to determine whether he is a specified employee or not. Salary. From there you can claim the deduction to section 16 class 1A standard deduction 50,000, and class 3 professional tax. This is standard deduction, this is professional tax. Professional tax in this case being 1,400. Come on, what is the ultimate value? Exactly 50,000. Then non-specified employee. Non-specified employee. Clear? Non-specified employee. Now what about the taxable value here? Salary being 1,01,400, and sweeper not taxable, watchman non-taxable. Gross salary being 1,01,400. Deduction under section 16 class 1A standard deduction 50,000 under default, shift out of the default tax regime. 16 class 3 professional tax value being 1,400 is subtracted. So 50,000 will be the taxable salary. Scenario 1. Scenario 2. His salary being 8,450 per month. Then 1,01,400, and standard deduction, everything is subtracted. Then he is a non-specified employee. In this case also, he is being non-specified employee. Okay. Sweeper and watchman are encased by specified employee. Then it is taxable for whom? All employees. All employees at the rates given in case 1 above, but their wages are reimbursed by the employer. Anyhow, employee pays and demands the amount to be recovered from the employer. Employer also settle this money. Then it is taxable for all the employees. 1,01,400. Sweeper charges being 600 rupees into 12, 7,200. Watchman salary 500 into 12 means 6,000. Then gross salary being 1,14,600. From there, standard deduction 50 and professional tax payment 1,400 can be subtracted. The taxable salary being 63,200. Clear? Third scenario. If his salary being 8,460, what happens here? 1,01,520. Employer provides. Employer provides means this will be taxable only for specified employee. Sweeper and watchman at the above rates, but amount recovered from him being 200 and 300 respectively. Now salary being 1,01,520. Subtract the standard deduction as well as professional tax here 1,400. The ultimate value being 50,120. 50,120. Then automatically he is now specified employee. As he is being the specified employee, everything will be taxable. Salary being 1,01,520. Sweeper value 600, but amount required recovered from employee for that being 200 into 12 months 4800. For watchman 500, amount recovered from employee in this regard being 300 into 12 months 2400. What about the gross salary? 1 lakh 1,08,720. Standard deduction 50 and professional tax 1,400 subtracted. Balance taxable salary being 57,320. 57,320. Shall we move on to the next one? Now, next one is all about amenities. Amenities. Facility of use of gas, electricity or water supplied by employer in the name of employer. Right. If gas, electricity and water also provided by the employer for the employee's personal use, now the verification to do is whose name is the connection, on whose name this connection is. You just go and check. If the gas, electricity and water, everything is in the connection name is in the name of employer, then it means the employer he himself provides. If he provides, then it is taxable only for the specific employee. If those connections are in the name of employee, then it's the obligation of the employee recovered or received from the employer on his demand. Then it's taxable for all the employees under section 17 class 2 subclass 4. Will it be taxable under 3 or 4? That you have to confirm. If it is taxable under 3, then it is taxable only for the specific employee. If it is taxable under 4, then it is taxable for all category of employees. Is that clear? Gas, electricity or water. Facility in the name of employee. In the name of employee means automatically what happens? Taxable for all employees. If the facility in the name of employer, then it is taxable only for the specific employee. Now, how can we value that, sir? If these facilities are purchased and given for the employee's benefit by the employer, then purchase cost will be taken. But the employer has own resources to manufacture. They themselves manufacture. Okay, gas is provided. The employer is he himself a gas agency running a gas manufacturing unit. Out of own manufacturing unit, if he is transferring, what can we do? Then you have to take the cost per unit for manufacturing. Provided in their employer's own resources or provided from outside agency. If it is from outside agency, amount paid will be taken. In case own resources, then cost per unit for manufacturing will be taken. That's all. Now, it's very simple. G Limited provides electricity to its employees P. Annual consumption as per the reading comes around 2,250 units. Determine the value of the perquisites in the following cases. Electricity meter in the name of P, whose name it is P. Then it is taxable only for, whom? All employees. How much? The rate of electricity being 4. So 2,250 units and the cost per unit being 4 rupees, 9,000 will be the perquisites value. To whom it is taxable? Taxable for Taxable amount. Taxable amount. Electricity meter is in the name of G Limited and rate being 4. The connection is in the name of employer, then it is taxable only for whom? Specified employee. The value being 2250 units are consumed, per unit cost being 4 rupees, then also 9000 taxable, but if he is being the specified employee. If he is not being the specified employee, of course not taxable. Clear? The last one. G Limited is a power generating company. They themselves generate the power. It's not purchased from outside. If it is not purchased from outside, then cost of manufacturing will be considered. The manufacturing cost is 2.9. This will be taken. And supply to the public 4 is not a matter for me. Okay. Own source. However, it charges 60 paise. Okay. 60 paise. Then what happens? 2250 multiplied by 2.9 is the cost of manufacture minus money amount recovered 0.6. Come on, get me the value. 5175. To whom it is taxable? That information is silent. Whether it is in the name of employer or not, that information is silent, so we are not able to address that. So any of the taxable value in this case being 5175. Shall I move on to the next one? All these things are very simple concepts only. Now, we'll move on to the fourth one. If educational facilities offered, okay, not educational allowance. Okay, education facilities. Employees' kids can study. Employer-owned schools or employer connected schools having some MOU. Not being reimbursement. Reimbursement means the employee he himself admits his son or daughter in any of the institutions and gives the bill to the employer to settle or ask the employer to pay the bill. Okay, other than the reimbursement. If it is reimbursed, it is taxable for all the employees. Employer he himself offers, then taxable only for the specific employee. Fourth one. Right. Educational facilities. Taxable for specified employee in general. But in case of reimbursement, this will be taxable for all employees. All employees. Now, if the education facility is offered to the children, okay, what happens then? It may be offered either employer school, or employers MOU based schools. Employer may have the memorandum of understanding with some other schools, right? Okay, in this case, cost of such education in similar school will be taken. Clear? But other school, if the education provided in other schools, then fee will be taken. Actual fee, whatever it may be, can be taken. So in Trichy, BHL, one of the leading PSU company, they have their own school called BHL school. Okay. Now what happens, the employees of BHL can admit their kids in the BHL school free of cost. Free of cost. So, but owned by whom? BHL company itself. This is the first scenario. And RSK school, another school. With that, BHL has MOU. What sort of MOU? BHL offers around 10 lakhs or 5 lakhs like year on year payment. After offering the 10 lakhs or 5 lakhs, whatever the payment may be as per the agreement, BHL makes a payment. Ask RSK to admit the BHL's employees' kids without any question. Don't ask for the fee. Okay. Because there's a contract between RSK and BHL. So in that case, as per the MOU, the BHL employees can admit their kids in RSK. In those two cases, the scenario is the same as per this one. Employer's own school, okay, it's very tough to run. Maximum 30 or 40 students only will be admitted from our employer's base. So what the employer will do, rather than owning one full institution, they can have a tie-up with another institution. So we'll send around 100 students or 50 students every year. Don't ask any other questions. If the employer has a wider network and more employees base, every year around 100 to 200 students are coming, they will have their own schools also, no problem. That may also be possible. Either employer's own school or employer having agreement with some other school in both the schools. If they admit the kids, the children of the employees, the fee will be considered. Okay. So what fee will be considered? BHL offers around 1,500, RSK offers rupees 1,200 per month. But both the institutions are having relationship with the BHL. Those fees will not be considered. Nearby, you have to find out any other schools having equal pride and prestige. Probably Montessori. Okay, there's a Montfort in college, right? School. Okay, Montfort school. So Montfort school charges around 1,800. Then 1,800 will be the value of perquisites to be considered here. Not the fees fixed by the own employer school or employer's MOU school. That those two schools' value will not be considered. Similar institutions' fees will be taken. If that fees is less than or equal to 1,000, exempt. If that fees is more than 1,000 and fully taxable. So now the question comes, so what happens if the fees is 1,800, sir? 1,800 itself taxable, or 1,800 minus 1,000, only 800 is taxable. Which is correct? Always this one is correct, not this one, because this situation went to court and court gave the judgment based on this logic. Director of Delhi Public School in 2011, the judgment given, the court, Punjab and Haryana court gave the judgment, High Court. Education facility is fully exempt if the value is less than or equal to 5,000 rupees, else fully taxable. As the limit is not standard deduction, it's not deductions. The value is beyond that, fully taxable. That's how the judgment is given with respect to this one. Immediately after that, CA Institute, corrected all the places similar adjustments. What happens in case of meals? Okay, free meals. If the free meals worth is less than or equal to 50, fully exempted, more than 50, fully taxable. In case of gift voucher, less than or equal to 5,000, fully exempted, more than 5,000, fully taxable. And in case of this one, hotel accommodation on transfer, less than or equal to 15 days stay, fully exempted, beyond that, fully taxable. Earlier was totally different. If it is more than 15 days, in excess of 15 days only taxable, like we studied on earlier days. Immediately after this particular judgment, the impact is here. The same consideration is followed for the other locations also. So when I started teaching for the CA and CMA, in CA book I started teaching this way. This is correct. And CMA book, this is correct. I got totally confused. Okay. Then I changed all of my book For the CA students, you follow this one. For the CMA students, you follow this one. The next day, no, next year, CMA also goes, means stands with the CA. Then immediately I corrected my book as per this one. The next year, CA, no, either you can follow this one or this one as per your choice. Okay. So what you can do now? Study, erase, study, erase. Okay. Sir, my memory is iron memory, sir. It will not go out of my memory, sir. See, your memory capacity will be lapsed then. Like a mobile memory. Always mobile memory is very costlier than the mobile phone, right? If you go for higher end memory, then it will be very costly. 512 GB, then it's very expensive. So your brain is also capable of storing only some limit. Don't store all. So you can go with this one itself. You can go with this one. Is that clear? Hope now you'll be able to understand. This one will be most suitable. Most suitable. But predominantly in education facility, this one only will be applicable because judgment is available for this. Already I told you in the very first class itself, we are studying about income tax law, not the act. So income tax law is all about interpretation of any act, how to study and how to understand. For that, you have to study Income Tax Act, you have to study Income Tax Rules and Finance Act. Even sometimes you have doubt, then you can go for reading the clarification given by the notification and the government circular, this government notification as well as CBDT circulars and all. Even still, if you have doubt, you can go to the court and court may give the judgment. That judgment will also be a part for your clarification. Here, the court judgment is available in this respect, so it is applicable for all the other areas. Clear? Director of Delhi Public School and Punjab Haryana court judgment. Is that clear? Now. Not only children, other members also can get the facility. If other members are getting the facilities, fully taxable. That's all. Fully taxable. If the children are getting this facility, then if the cost being less than or equal to 1,000 will be exempted, else fully taxable. If it is being the employer owned institution or employer having MOU with schools, in that case, the value is less than or equal to 1,000 is calculated based on the similar school's fees, not the same school's fees. In case other schools, that school's fees can be taken directly. If that value is less than or equal to 1,000 rupees per month, fully exempted, beyond that, fully taxable. Right? In case of other members, that 1,000 limit will not be applicable. 1,000 limit will not be applicable. Is that clear? So, education facilities usually taxable for the specified employee. In case of reimbursement, taxable for all employees. Facility provided to children. The facility provided by whom? Employer's own school or school in which agreement is made. Memorandum of understanding is made. In that case, children. If the value is less than 1,000, is totally exempt. Okay. How can we determine the values? Are cost of such education in similar school will be taken, not the same school will be taken. There may be chances of manipulation. So I don't consider your school's value. I will consider the nearby school's valuation. But no, sir, I don't have any connections, sir. This is a private school only. No problem. That value will be directly taken. The amount paid for such a school will be directly taken. If the value is less than or equal to 1,000, will be exempted or fully taxable. What about the number of children eligible for that? Any number. The 2 number will not be available here. In case of education allowance, no, only 2 kids will be provided. Here it's not applicable, right? Child includes stepchild and adopted child, but does not include grandchild and illegitimate child. Just similar to earlier case we can follow here. In case of employee, he himself attends any education facilities or trainings, that will be not taxable. Refreshment course, like employer offers and some training classes for the employee for the improvement. In that case, any fees paid by the employer is for the development of the organization only. It's an official, not taxable. Is that okay? Hope now you'll be able to understand all these cases. Now, let's try to solve this illustration. Determination of value of education facility in the following cases. 3 children of G, an employee of S Limited, are studying in a school run by S Limited. Employer owned school. So school fee being 2,500 and hostel fees being 2,000, but the employer recovers only 600 and 500 per month respectively. However, similar school, this value will not be taken. School fee will not be taken if it is being the employer's own school's fee, right? So education facilities, education facility, which value will be taken? 1,800. What about the hostel fees? This will be applicable only for the school fee, not for hostel fees. For hostel fee, you can take as it is. Okay. Education facility, similar schools fees will be taken. Hostel facility, employer's own school value will be taken. Right. Minus amount recovered. Here the amount recovered being 600. Here the amount recovered being 500. Okay. Clear? How many children? 3 children. So into 3 into 12 months. Into 3 into 12 months. Come on, get me the value. 43, 200 first case. This will be 54,000. Overall taxable value being 97,200. 97,200. Yeah. The employer has also reimbursed the school fee of 1,200 of his nephew. So not children, other members. Other members, the 1,000 limit will not be there, fully taxable into 12. 14,400 is taxable. Okay. But adapted, no problem. Fully dependent, we never bother about the dependency here. Household calculation, no, based on the dependency. Here, we never bother about dependency. We will bother about the child. Adapted and direct children. Okay. Clear? Come on, text me if it is over. Class subclass 3-4, I think I may complete 3-4 today itself, and 5-6-7 I may cover up in the next class. 7-7-8. Okay, so I need fresh class for that. So today I may finish off 3 more aspects: transport, LTC, and medical facilities. I try to finish up these 3. Okay, these 3. With that, majority concepts related to class 3 and 4 over. Okay. 3 children. Astimini, your question. Why do we multiply with 3? 3 children. Okay. Clear? Yeah. So Pandya has given the answer. Good. Now, Mr. Z is the manager of F Limited. His son is a student of Amity International School. School fees is 6,000 per month. Hostel fees 4,000 per month. Directly paid by F Limited to the school, but recovers it from Mr. Z only 40%. Mr. Z also joins the advanced course of marketing management for 4 months at IIM. Course fees being 4,50,000. This is completely exempted because refresher course. If any training for the employee, then it is for the company's growth only, so it is always exempted. And these 2 are taxable. 10,000, 40% recovered, then balance 60% will be taxable. Okay, how much is that? 10,000 minus into 60%, 6,000 is taxable. For 12 months, 72,000 rupees is taxable. 43,200 for school fee, 28,800 for hostel fees. Both put together, 72,000 will be taxable. Is that clear? So now the easiest one. So here in footer I have given the taxable school fee as well as hostel fees separately. Here I have calculated combinedly. Is that okay? Of course, this value will be totally exempted. This will be totally exempted. Shall I move on to the next one? Now, free or concessional tickets. Free or concessional tickets. Fifth one. Now, employer engaged in transport business. Transport business. Right. Provides transport facilities at free of cost or concessional rate to specified employee. For what purpose? Private purpose. Official, you always forget about that. Private purpose. Okay? For private purpose. Now, in this case, the fare usually charged for outsider, from their amount recovered will be subtracted. Balance will be taxable value. Balance will be taxable value. Clear? Either in his own vehicle or hired vehicle. Private purpose. Taxable only for the specified employees. Okay. What happens if employer being not in transport business offering services? In that case, all employees will be considered as taxable persons. Okay. If in this case transport employee business, the employer being involving in transport business, taxable only for the specified employee. The same not in transport business, then taxable for all employees. Sorry, all employees. Clear? Now, Indian Railways or Indian Airlines to their employee, what happens here? Fully exempt. Fully exempt. All these costs will be the burden for the other travelers. It will be added. One of my friends' son is working in Indian Airlines. The morning he gives me a call. I'm having breakfast here in Madurai. The night in the afternoon he says I'm having the lunch in Chennai. Okay. How do you travel? Then flight only. No. What's the fare? My son is there. No. So just think over in case of railway. One of my students, when I was working in college, his dream was to become somehow in employee in Indian Airlines, Indian Railways. Why? So I just why do you want to go for Indian Railways, sir? I want to travel all over India in train, sir. Okay, and it's also tax free, not taxable at all. So, in case of employees of the railways and airlines, fully exempt. Clear? So from this it is very clear, if the employer involving in transport business offering any facilities, then it is taxable only for the specified. If he is not involving any transport business, if he is offering such facilities, taxable for all. Indian Railways and Indian Airways, completely exempt. That's all. It's only theory. We'll now move on to the next one. Okay. Leave travel concession and medical facilities. Okay. Now, we'll try to finish off leave travel concession. That leave travel concession is taxable only for specified employee. Leave travel concession. Now, leave travel concession. So, in India, okay, you can go anywhere. Maybe from Trichy, he can visit to Jammu and Kashmir also. Okay, the travel cost will be totally exempted. Travel cost will be totally exempted. Is that okay? He wants to go for a family trip during the holidays from Trichy to Jammu and Kashmir. Will he be able to enjoy the benefits of exemption, sir? Of course. And what are the benefits he can enjoy? Number one being 2 times in a block of 4 years can enjoy. Okay, block of 4 years. Okay, in a block of 4 years he can enjoy 2 times. Second one being how he can go. Okay, he can go by air flight or rail or bus recognized. In case of other mode, other mode. In case of air flight mode, economic class is provided. Economic class, business class and economic class. Two classes are in flight. You can go by economic class or business class. If you go by economic class, the seats are very cramped. You cannot stretch your legs also. Okay. In business class, you may have a full berth, like you'll have lots of facilities. Whether you go or not, at least go and see the YouTube. Lots of people are now promoting these things. In case of rail, first class AC will be taken. First class AC fare will be given at free of cost. In case of bus, recognized bus services, deluxe class will be taken. Deluxe fare will be taken. Any other mode where you cannot travel, there is no any flights available, trains available, even recognized bus service also not available. You have to go by bullock cart or by walk, whatever it may be, by run. I have to travel to go. In those scenario, the distance traveled and value is calculated based on this one. First class AC fare. Railways first class AC fare. If you go by walk, so it's good profits are for me. I'll go for 1,000 kilometers walking and I can recover fare from the government. You have to prove that there is no such any mode available. In that case, the distance traveled by any other mode, no, for that you can recover the money from the government at first class AC fare rate. First class AC fare rate. Is that clear? So, can I go to Jammu and Kashmir this way, sir, from here to Mumbai and Calcutta and Jammu and Kashmir? Yeah, of course you can travel, but the benefit will be given only the longest duration to reach using the shortest route. Okay, you can travel, but while getting the reimbursement or benefit, no, this fare only will be given as an exemption. Is that clear? So, only shortest route to the longest destination can be claimable. That too in the form of air, economic class and rail, first class AC fare, bus, recognized deluxe class fare and other mode, proportionate first class AC fare by train can be taken. Right. 2 times in a block of 4 years, right? Here year means calendar year. Okay, it's not financial year. It's now my out of my memory. No need to worry about that. It starts with January 1, 2020, like 4 years, right? Remember, if the block of 4 years starts with 1st January 2020 and ends on 31st December 20, 21, 22, 23, 24, right? This is the block of 4 years. Block of 4 years. In a block of 4 years, he can visit 2 times in a block of 4 years, right? But he could not travel. What can we do? If he missed to travel in the next block of 4 years, starts with 31st uh, December 2024 or 1st January 2025, ends on 31st December 2028. This is the next block of 4 years. If you miss to travel, you can finish up enjoying one trip in the next first year of the next block of 4 years, 31st December 2025. Within this year, you can enjoy one carried forward unused service. Another 2 can also be enjoyable. From this, it is very clear in a block of 4 years, if you miss to enjoy one of them, you can enjoy that one in the first year of the next block of 4 years. Next block of 4 years. Clear? If I miss 2, what happens? You have the options to carry forward only one. Yes, one is lapsed. One is lapsed. Available only shifting out of the default tax regime. Otherwise not possible. Otherwise not possible. Now, carry forward one travel of a block of 4 years to the first year of the next block. Only one travel can be carried forward. Whom can enjoy this basic benefit? Assessee and family. Here I use the term family, not the members of household. You understand? You have to understand the difference between family and members. Then who is called members are? Sir, families are spouse and children, provided whether they are dependent or not. Spouse and children. But in case parents, brothers and sisters, they should be dependent. Members of household is totally different. Where servants will also come. Here servants will not come. You understand? That too, brothers, sisters and parents will come only if they are mainly dependent on the assessee. If they have independent life, they too have the employment, never bother about the assessee, then they will not fall under family. Now, in case of children, no, maximum 2 children can be taken. Restricted to 2 children. Restricted to 2 children can be taken. Except child born before 1/10/1998. If the child born before 1/10/1998, the limit is not there. Any number can be taken. Any number can be taken. So age of the child may be, currently it may not be child, right? 1998. So definitely 27, 28. Huh? So 3 or 4 also accepted, but they should not be dependent. Okay, they should not be dependent. Okay, can be accepted, but multiple births after first child, later case also be considered. Later case, two scenarios. If the child born before 1/10/98, no problem. Limit is not there. But in the first delivery, one child born, in the second delivery, twins born. Who can enjoy? All the 3 can enjoy. The very first delivery, 2 child, and the next birth is only 1, then restricted to only 2. So, promotion of family planning here. Clear? So, that's the logic. Child born before this date is no problem. After that period, first child being single and second child being multiple birth. Triplets, first and then triplets. Then all the 4 will be eligible. I think this is made ready only for a specific MP by the time, right? If you are in the new tax regime, this will be totally vanished. Okay. So leave travel concession for any place in India, available only for the specified employee. Exemption will be 2 travels in a block of 4 years for the assessee and family. Family means spouse and children, whether they are dependent or not, a matter. And in case parents and brothers and sisters want to accommodate, they should be dependent. And two travels, if you are not able to enjoy, you can carry forward one travel, that too enjoyable in the very first year of the next 4 years block. Right. And what about the travel benefits are by air? Then economic class fare can be reimbursed. In case of rail, first class AC fare can be taken. In case of bus, that too recognized deluxe class fare can be taken. If you don't have this mode of transport, then you can use other mode. The distant travel will be now encashable based on the proportionate value you pay for the first class, means first class fare by train, right? And restricted to two children only. But if the child born before this date, completely exempted. But after that, first child may be single. Thereafter, multiple birth means everybody can enjoy. Okay, clear. And this will be available only for the shifting out of the default tax regime. Else, it's not eligible. It's not eligible. Is that clear? Let's try to solve an illustration here. Rajesh went to Srinagar on holiday on 15/11/2024 with his wife and three children, one age 6 years, twin daughters age 3 years. First child age 6, then first delivery 1 and second delivery twins is there. So all the three will be eligible. They went by aeroplane economy class and the total cost of the tickets by the employer was 58,000, 43,000 for adult and 15,000 for the three minor child. Compute the amount of leave travel concession. Okay, fully exempted. Fully exempted. Will the answer be different if among the three children, the twins are 6 years old and the son 3 years? So first delivery being the twins, 6. Thereafter son 3 years. Then in this case restricted to only two children. The one child's value is disqualified. This 43 okay. The child's value for three children 15,000. No, out of that one child's value is disqualified. So 15,000 into 1 by 3, 5,000 disqualified. This is taxable value for the specified employee. For whom? Specified employee. Is that clear? Clear? Rajesh exercised the option of shifting out. Only then this is allowed. Otherwise not available. Clear? Hope now you'll be able to understand the concept called LTC under section 10 class 5. Under section 10 class 5. Any doubts here? The last component, medical facility. So what are things are over now? We have completed all these things, leaving only one thing: medical facilities. If the medical facility being reimbursed, then it is taxable for all employees. Otherwise, it is taxable only for the specific employee. 7 items are going to be covered. All the seven items are falling under which category? 3 and 4. So we have completed 1 and 2, 3 and 4, 8th also over. So we have to cover 5, 6, 7, 7A, maybe in the next class. Right. Medical facilities. Now, private employees. No, here LTC, no, private and government is not a matter. Only specific, non-specific is matter. Is that okay? Otherwise, always this will be exempted only. Leave travel concession is exempted only. Is that clear? Okay. Hope your doubt is clarified. Satyamurthy, come on, text me. Now, medical facilities, the last one. Medical facilities. If the medical facilities is offered in hospital maintained by the employer, okay, or maintained by government, local authority, government approved for this purpose, or prescribed disease under rule number 3A, we see that later on. Okay. Or premium paid for health insurance. In all these cases, fully exempt. In all these cases, fully exempt. Is that clear? Very simple. Employer hospital, government, government or government approved hospital, and specified disease, cancer, TB, AIDS, COVID-19, etc. Right. All the three will be totally exempted. Clear? Treatment in hospital maintained by the employer, reimbursement of medical expenditure incurred in hospital maintained by government, local authority, government approved. Here reimbursement. Employer hospital, no payment will be made by the employee, directly gets treated and comes out, and everything will be taken care by the employer. Nothing will be taxable. Sometimes if he goes to the government hospital or government approved hospital, he has to pay the fees and later he recovers it from the employer. That is also exempted. Some prescribed disease where the treatment is taken in a hospital maintained by the government, like the specified disease being cancer, TB, AIDS. For that also, whatever the amount you get reimbursed later on will be exempted. Health insurance and group insurance approved by central government or IRDA, Insurance Regulatory Development Authority. Okay. For the employee himself or for family of the employee also be exempted. Also be exempted. Now the question is, what is called family? Family in this case being this one. Earlier we have seen no LTC, the same will come under this case also. Okay. For all employees, if it is reimbursed, okay, if it is reimbursed, in case a private hospital, no, if it is reimbursed, fully taxable, right? And employer he himself directly pays, then it is taxable only for the specified employee. That's all. In case of taxable, I have to deal with the fifth one. What happens here? First of all are exempted. It's very simple one only. So you have to consider the fifth part here. Okay, fifth part. Treatment in foreign. If the patient gets treated in a hospital located outside India, so what are the costs you have to spend for treatment? And he has to stay there, no cost of stay. He has to travel there, no cost of travel. Three costs are going to be incurred. Treatment cost, what spent, no, for the patient is exempted. Cost of stay also exempted. Cost of travel also exempted. But the patient, no, he cannot go he himself, so he has to be accompanied. Some attendant may also go along with him. Attendant. Of course, treatment will not be applicable, right? Cost of stay as well as cost of travel will be exempted. Exempted and exempted. What about the conditions, sir? Is it completely exempted or is there any conditions applicable? Yeah, of course, condition applicable. For these two, no. They have to get the permission from RBI. The RBI gives a limit to spend money. To that extent of RBI limit, if spent for this purpose is exempted, beyond that will be taxable. What happens in the case of cost of travel, sir? This cost of travel will be exempted only if that assesses gross total income is less than or equal to 2 lakhs. What is called gross total income? Income of the employee from employment, house property income, business income, capital gain, everything put together. Gross total. It's not salary income only. Is that clear? If the gross total income is less than or equal to 2 lakhs, then cost of travel will also be exempted. Otherwise, that will be taxable. Is that clear? So I have given here in detail. Patient. Treatment exempted, cost of stay exempted, cost of travel also exempted, attendant Of course, this is not applicable. Stay and travel is exempted, but provided these two no will be exempted only if there is RBI permission for the spending, or to the extent of RBI spending permission, you can spend. Beyond that will be taxable. And cost of travel will be exempted if the gross total income is less than or equal to 2 lakhs. Let's see. Now we will try to solve this illustration. Compute the taxable value of the perquisites in respect of medical facilities. Medical premium paid for the ensuring health of Mr. G. G is the employee. Medical insurance premium exempt. And treatment of Mr. G of his family doctor. We have not seen such a case, so it is taxable. And government hospital treatment exempted. Treatment of Mr. G's grandfather. Grandfather is not falling in the family. And also private clinic. Disqualified under two conditions. So taxable. This 12,000 is taxable. Mr. G's mother, 68 years, dependent. Dependent will come, but family doctor, no. It's not approved at hospital, so taxable. 8,000 will be taxable here. Treatment of Mr. G's sister, dependent. Sister, dependent being a family member only, no problem. But the treatment is done in nursing home. It's not approved hospital, so taxable. And treatment of Mr. G's brother, independent. Independent, always disqualified. Okay, so taxable. Now, what about the Mr. G's father? 78 years and dependent, of course, available but abroad. Expenses of staying abroad of patient, 30,000 and treatment, 50,000 rupees. Right. So, travel is not given here. Travel is not given. So, treatment and staying is given. Treatment and staying expenses will be exempted to the extent of amount permitted by RBI. The RBI permission in this case being only 75,000. Up to 75,000 exempted, so balance 5,000 is taxable. Balance 5,000 is taxable. So the taxable medical facility in this case being summation of all this value. Is that clear? Hope now you will be able to understand this one. Clear? Only employer owned hospital and government approved hospitals are for treatment of specific diseases under the same government scheme and premium. These four will be exempted. In case of foreign, it's totally different. Clear? Let's move on to the last illustration. Himalaya Limited reimburses the following expenditure on medical treatment of son of an employee current. The treatment was done by UK. Done at UK. Okay. For current. Traveling expenses being 1,15,000. Stay being 45,000. 70,000. RBI permission 45,000. Okay. This is 70,000. Sorry. Medical expenses, treatment. Actual expenditure 70 and RBI permission 50. Right. So in this case, taxable value being 25,000, 20,000. Clear? But in case of travel, you know, you have to consider this being taxable only when gross total income is less than 2 lakhs. Less than 2 lakhs. Not exactly 2 lakhs, less than 2 lakhs. Compute the taxable perquisites of the assessment year 25-26 in the hands of current if his annual income from salary before considering the medical facility being 1.5 lakhs and 2 lakhs. So gross total income being 1,50,000 or being 2 lakhs. In case of 1,50,000, this will be exempted, but these two are taxable. So the total taxable value being 45,000. If the gross total income is 2 lakhs, the travel expenses also be considered as taxable amount, 1 lakh 15. And stay and the treatment will be always taxable to the extent beyond RBI permission. This value being 1 lakh 60. Clear? So that's all. With that, majority concepts are over. Still, I need one session to complete all the aspects of salary.